Hello everyone, welcome to Global Online. I am your educator Dr. Swati over here. So here we are going to discuss the Maha marathon today, and here this video is going to be near about 4 hours continuously. Okay, and here we are going to discuss the complete 10 units of our commerce and management. Okay, here, and this is a full and final revision. Once you see this video, once you see go through with this all the MCQs and important PYQs, so this is your final revision. Okay, you can complete your final revision over here, and I'm sure that you will get near about many questions from this particular after seeing this particular video. Okay, and here we are going to discuss the most important MCQs and PYQs over here. Okay, so just go through with this video. Okay, and just try with yourself to answer. Stop the video, mark your answer, and then you have to move ahead. Okay, and I'm expecting you will cover the maximum question over here. Okay, and this video will going to be very much useful for you, I'm sure about this. Okay, before I will go ahead, I just quickly tell you about the Global Online. So here you will get complete course of the commerce and management. Okay, and our new batch will be going to be started from the 2nd of September, and for your convenient we are launching our new batches every Monday. Okay, and for registration you will get 50% discount on the fees for if you register yourself for the paper 2, and who register for the paper 2, here that person will get a paper 1 is free of cost for you. Okay, so what you will get over here, you will get over here the daily live lectures, complete syllabus notes in the PDF format, full syllabus mock test, 4000 MCQ series with detailed explanation is already uploaded in the app. Okay, and we are trying to do more for your MCQs for your preparation. Okay, PYQs with detailed explanation, and if you have any queries along other than this one, so you can get in touch with this WhatsApp contact number. They will help you with their best. Okay, so how to download the Global Online? Just go to Google Play Store, then you have to then you have to register with your number, then you have to go to the My Course section and then register whatever the course do you want. Okay, so once you register, you can see the interface is looked like this. So here is unit wise folder is given to you. Okay, and in this video the recorded lecture is also given to you, and PDF format notes is also available for the paper 1 plus paper 2. So it is more convenient for you to prepare for the UGC net NTA net examination. Okay, and for set also. So let's move ahead with the question. Mm, isn't okay now? Now it is clear. Isn't okay now? Okay, Chandan Kumar, okay, my voice is okay. Okay, clear, okay, fine. Thank God. Okay, let's move toward the next question. The next question, which is in your screen, which of the following summary measure denote the degree of uh, leukocytes? Just give me, isn't it? Leukocyteness, okay? In distribution, okay? So, options is given: measurement of central tendency, measures of a variation, measures of a skewness, and measures of kurtosis. Okay, so these are the options as given to you. Now, which of the following summary measures denote the degree of leukocytes-ness? Okay, this is leukocytes-ness. That means there is an leukocytes means there is in a bend. Okay, bend means you can say that in a simple word we can say there is a skewness. Okay, so first of all, the if you know this word, the leukocytes, that means there is an you can see this is the diagram is like this. Okay, our curve is going to be like this. So bending either on the left side or either in the left side or right side. So this is leukocytes, okay, sub-distribution. So there is a measure of central tendency. What is measure of central tendency? Ma'am, measure of central tendency, that means we have to draw in diagram. That is, this is, okay. So here either A is greater than mean is greater than median, median is greater than mode, okay, or either or all the things. This is either they are that is measure of central tendency when we calculate mean, median, mode, and in median we calculate arithmetic, or we calculate the geometric mean and the harmonic mean. Okay, so this is central tendency. Okay, that means how the our data is centric to particular data. Okay, then the measures of variation, that means how the vary of data from the given set of data. Okay, so here we are studying about the standard deviation. Then the measures of kurtosis. Measures of kurtosis is talking about the like this. This is lapocentric. Okay, this is and this one. Okay, so this is mesocriticis. Okay, and this is plateau. Okay, so this is the kurtosis. That means here you can see the how longer our skewness is going. Okay, the height is talking about the height. Okay, especially for the height of data. When we are talking about the skewness is talking about the bendness. Either our diagram is going to be bend in the right side or either is going to be bend in the left side. Okay, so this is the skewness, the measures of the skewness. Okay, so this is leukocytes is the measure of what? Option number 3. Okay, anyone having a doubt? No? Can I move toward the next question? It's okay. Leukocytes means, that means is moving either inside. That is bendness. Either you can say the bend, where is bending, as skewing, skewness, where it is skewed, either it left side or either your right side. This is okay. The next question, which of the following are the property of normal distribution? May be symmetrical or the skew. Option number A, unimodal, bell shape and symmetrical, okay. Then asymptotics to the x-axis, and N and P are the two parameters. U and actually this is N means your sample or your number, and P is your parameter, or either you can say the population. Okay, and here is mu is also called as your population, mean population, and is called as a standard deviation. Okay, so the which of the following property of normal distribution? For the normal distribution is also called as symmetric, is also called as skewed. Okay, skewed, bell shape. Okay, so what will be the right answer for this question? What are the property of that? Option number 1, 2, 3 and 4. Okay, let's understand what is a normal distribution. Normal distribution where your diagram is exactly like your bell shape. When it will your diagram or your distribution is on the bell shape when your mean is equals to your median and median is equals to mode. Okay, so these. Now the unimodal, bell shape and symmetric. Unimodal means single model. When we are talking about the single model, okay, so it is like this, it is like this. Okay, when we are talking about the two models, so it is like this. So if I'm talking about the uni model, so it is look like a bell shape? No. Okay, when we are talking about the two models, so it is when we combine the two models, then it is look like a bell shape. Okay, so that's why option number 1 is going to be cancelled over here. Then the asymptotic to the x-axis, that means asymptotic. Okay, asymptotic means asymptotic base shape. Actually the asymptotic to the base line means it is still never touch to x-axis. Okay, what does it mean? That means it's never touched to x-axis. Here you can see there is this line, this bell shape is not going to be touched to the axis. It's known as a asymptotics, okay, to the x-axis. Then, so yes, it is true. Here you can see there is this is not touching to the x-axis, this is x-axis. Okay, so yes, it is true. That means B is true. Then N and P are two parameters. N and P are two parameters. It is true. Yes, here we need a sample, here we need numbers, and here also we need a parameter, that is population. So these are the population numbers, that means number, and the population are the two parameters over here. Yes, it is true. Then U and standard deviation, that means U means population and the standard deviation are two parameters. So just give me a second. Option number D. No. This is N and P is not a two parameters over here. So it is a false. Okay, this is not a parameter. Actually, the population and the standard deviation are two parameters. Okay, so option number B is true. Give me a second. Maybe symmetric and skewness. Shit. Just give me a second. Just give me. The statement is not right. This is statement number A, statement number B, statement number C, statement number D, and statement number E. I'm going to be confused. Okay, first thing, the normal distribution may be symmetrical and skewed. Yes or no? This is symmetrical and skewed. Where normal distribution are skewed? No skewed. Symmetrical, normally or bell shaped, but so option number A is false. Okay, then unimodal bell shape is symmetrical. Yes, unimodal bell shape, perfectly symmetrical curve, it's called as a unimodal. Okay, it's called as a unimodal. When we are drawing like this, so it is called as a dual model. When we are making with this, okay, this is dual model. Okay, so this is unimodal. Okay, so this is option number B is true over here. Sorry for confusion. Okay, so option number, this is B, B, C, D and E. Okay, A, B, C, D. Okay, so this is true. Then symptotic to the x-axis, yes, it is also true, that is C is also true. Okay, then your N and P is false, that is your N and P, that means numbers and the population parameters are the two parameters. No, yes, the population and standard deviation are two parameters. So option number B, option number C and option number E is correct. Option number B, C, E, the option number 2 is correct. Okay. Okay, next question. Let's move toward the next question. Which of the following statement is false? Regression coefficient are independent of change in origin but not a change of scale. Option number 2, both the regression coefficient cannot assume as a value, ignore the algebraic sign and greater than 1. Then the third, regression coefficient of the two variables may have a different algebraic sign for the real life situation, and the coefficient of correlation are independent of change of origin and the scale of the data. So these are the options as given. So what will be the right answer? First thing, the properties of the, it's false. The question is about the false. What is a false thing? First thing, you have to be familiar, you have to be known with that what are the properties of the regression. The first property of the regression is regression coefficient will have the same sign. Okay, the first thing, that they have the same sign. Okay, the regression coefficient will have the same sign. Okay, then the second thing, that is the sign, since the value of coefficient correlation, okay, that means CC, okay, cannot exceed the 1. That means it's lie between the +1 to -1. It's not greater than, it will not be greater than 1. Okay, then what, the coefficient correlation will have the same sign, they also having the same sign as a regression coefficient. That is, if the regression coefficient have the negative, or it will be negative and vice versa. That means the sign of the both regression and the coefficient correlation having the same sign. Okay, having the same sign. If the correlation is negative, regression also negative. That means if R is negative, then regression is also negative. If R is positive, so regression also positive. They are having the same sign. Okay, along with that, the regression coefficient is independent of origin but not of the change of scale. Yes, in the contrast of the correlation, both the independent of origin and the scale. Okay, so first thing which we have seen in the statement number 1, that is regression coefficients are independent of change of origin but not of scale. Yes, it is true. Yes, both, and coefficient of correlation are independent of change and origin and scale. Yes, it is true. Okay, so two statements are true. Now let's move toward the next, that is both the regression coefficient cannot assume a value, okay, greater than 1. Yes, it is true. The value is lie between +1 to -1 for the both condition, regression coefficient also and correlation coefficient also. Okay, so it is true. Then the regression coefficient of the two variable may be different algebraic symbols of their real life situation. No, the regression coefficient and the correlation coefficient having the same sign. Okay, so the option number 3 is false over here. Okay, so the question is talking about the false statement. So false statement is option number 3. Clear? Okay. Next question. Let's match the ANOVA test is given, Z test is given, chi-square test is given, then the Kruskal Valley test is given. Okay, so match this. This is a very simple question. Okay, so first thing, the ANOVA test. ANOVA test is matched with, ANOVA test is non-parametric. Okay, so option number 1 is leave it. Option number 2, parametric, but talking about the parametric test, just leave it. Then option number 3, yes, option number 3 is talking about the non-parametric. So yes, non-parametric test, to test the hypothesis difference is more than 2 sample means. So ANOVA test is a non-parametric test, and also it is taking the hypothesis of difference is more than 2 sample mean. Clear? Then Z test is what? Z test, it is the test where you calculate the large number of sample. Okay, when your standard deviations are unknown. Okay, so where in that condition we use a Z test, and the opposite of that is a T test. When we use a T test, that means our sample size is less than 30 and we are unknown with our standard deviation. Okay, when we use Z test is we use when our population or the sample are more than 30 and the standard deviation are known. In that condition we use a Z test. Okay, so Z test is matched with option number 4. Okay, so according to this we will get our answer, that's option number 3. Yes, then that is chi-square test. Chi-square test, it is what? It is a fit. Is it a goodness of a fit, distribution of the fit? So yes, the testing whether the standard probability of distribution is fit well to the given frequency distribution. Then the Kruskal Wells test, it is a parametric. Yes, it is a parametric test. Is also called as a H test. Okay, a parametric test to test the hypothesis difference is more than 2 sample mean. Clear? So option number 3 is correct over here. Yes, then Kruskal Wells test is it's a non-parametric ANOVA test. Okay, it's also called as non-parametric ANOVA test. Okay. The next question, which of the following samples are non-random, non-probability sampling? Non-probability sampling. So systematic sample, quota sample, cluster area sample, pervasive sample, and replicated samples. So these options are given to you, and the question is about the sample non-random, non-probability sampling. So I think it is easier question for you. That systematic sampling, it is when we are talking about anything which is a systematic, so it is a random, it is a probability, there is a probability. In the quota, when we are talking about the quota is, that means non-probability, that means not the data is collected or the sample is collected non-randomly. Okay, there is a quota is set by the researcher, and from that quota he select the sample. So this is non-probability. So we know that option number B is 100% is going to, and option number we are going to be cancel over here. So according to option number A, this cancel. Okay, we know that option number B is 100%. So we have two options. Now the cluster area sampling. When we are talking about the cluster area is also a type of a probability sampling. Okay, so this is also not comes under. Then the persuasive sampling. Persuasive, when we are talking the persuasive, that means we are pursuing, okay, particular data to collect it. In that case is also your non-random sampling. So the option number B and D definitely will come, but option number C will not come. So we can eliminate this option. So we have only option number B and option number D. Okay. Yes. So option number 4 is correct. That is B and D. Okay. Replicated sampling. It's a type of probability sampling. Okay. It's probability, or you can say random sampling. Clear? Now the next question, which of the following statement is true? True. It's talking about the true. Okay. So options is given to you. The sum of the absolute deviation measure from median is the least. Option number 2, if each value is in a given series is multiplied by the constant k, the variance of the new series will be just give me a second, there is some mistake. If absolute list, okay, if the given series, okay, this is option this is second option. Okay, the series would be, this is third one and this is fourth one. Okay, so if each value in the given series is multiplied by the by a constant k, the variance of the new series would be equals to the variance of the given series. Then option number 3, the variance is a square of the value of standard deviation divided by the mean. Then the fourth one, z square value of the x is a ratio between the x divided by the mean of x. Okay. So what will be the right answer? It's talking about the true. Okay, this question is talking about the true. Try it with yourself, then I will explain you. Let's understand. I'm starting with option number 1. Okay, the sum of absolute deviation measured from the median is least. Why? The sum, when we are calculating the sum of absolute deviation from the median is mean, because the mean deviation is minimum. When we are taking the mean deviation, you know that the summation of deviation of x. Okay, when we are talking when we are taking from the mean, it is least. Okay, it is least. When deviation are taken from the median is the middle of the most. Median means what is the middlemost value of the series. Okay, so they disperse the whole series into minimum value. That means they're dividing whole value in the middlest value. So that's why when we are talking about the sum of the absolute deviation measured from the median is least. Okay, so yes, it is true. This is true option. Now the next option is given, that is, if each value in the given series is multiplied by the constant k. Okay, whatever the series is given, that is 1, 2, 3, 4, 5. Okay, these are the constant series, and when we are going to multiply with the 2. Okay, suppose the constant k is 2. Okay, so it is 2, then 4, then 6, then 8, then 10. Okay, the variance of the new series will be equal to the variance of the given series. Okay, so when we are multiplying with it, so what is happening over here? Here the property of variance, that if all the information is multiplied with the constant, the variance remain multiplied by the square of the constant. Okay, when I take the observation, that is this observation, I multiply with the 3. So what is happen over here? So here you can see everything is increasing. Okay, by with the multiplication, so there is a changes. So their variance is it their variance is equals to that series? No. Yes, so that's why this option is false. Again I'm repeating this statement, that is, if the each value is given series is multiplied by the constant k, that means this series is given, I multiply with 2. Okay, the variance of the new series is this one, that is, this is a new series, okay, 2, 4, 6, 8, 10, okay, would be equal to the variance of the given series. That means when we are taking the variance of the given series and this series is going to be different, na, is how it will be equal. So it will not be equal. Okay, then the variance means what? Variance means what? Here you can see the changes is going to be doubled when you are multiplied with 2, or it will be going to be triplet when you multiply with 3 constant. Okay, so there will be no equalness, okay, in the variance between the given series and the calculated series. Okay, then the variance is the sequence, the square of the value of the standard deviation divided by the mean. So here the variance is the square of the value of standard deviation, the value of the standard deviation, not by the mean. Okay, the variance of the square of the value of standard deviation is not divided by the mean. Okay, so this is also false. Then the z-score value of x. If the statement is said that the variance is the square of the value of standard deviation, is there is a full stop over here, then it is true. But he added one thing, that is divided by mean. No, this is not the part of this. Okay, this is not true. This is a wrong thing. Then z-score value of the x is a ratio between the x divided by mean of x. So here the formula when we calculating the z-score, let's understand the formula. Z is equals to x minus population. Okay, then we have to divide it with the standard deviation. Okay, so where x is the raw score, okay, mu is the population mean, that means x is what? When we are talking x is what? Your raw score. When we are talking the mu is what? It is your population mean. Okay, and it is your standard deviation. Okay, so as a formula show, z-score is simply the raw score minus population mean divided by the population of standard deviation. So here the z-score value of x is a ratio between the x divided by the mean of x. No, it is the raw of x minus taking the difference with the population, and then we have to divide with the standard deviation. Okay, so this is also false. So the only statement 1 is true. Clear? So option number 1 is correct for this question. Now the next one, I'm just taking last one question. Okay, then we have I'm going to be end over here. Then which of the following measures of the central tendency is not affected by the presence of the extreme value in the data of the distribution? The options are given in your screen, that is the arithmetic average, then the geometric average, then the positional average, and then the harmonic average. So what will be the right answer? Which of the following, let's understand the question first. Okay, which of the following measures of central tendency? Yes, measures of central tendency, you know what are the measures of central tendency? Mean, median, okay, and the mode. Okay, these are the central tendency, and they also having the geometric mean, they also having the harmonic mean. Now the question is not affected by presence of extreme value in the data set of distribution. So you know that the mean, that means arithmetic mean, is having the two parts, that is geometric mean and harmonic mean. Now according to the option, these arithmetic mean, geometric mean and harmonic mean, these are show the central tendency of the particular, taking the average of that. When I'm taking the average, let's understand, there is the number 1, 2, 3, 4, 5. Okay, from this number I'm just taking the average of that. Okay, so this is 3 6 plus 4, that is 10, and this is 15. So 15 divided by 5, so how much? That is 3. So 3 is the average. Okay, so this is 3 an average. Now is, if I'm changing over here, if I'm changing to 5 to number 6, okay, or either, okay, so I'm changing with 6, so how much? That is, I'm adding, that is 16. Okay, so 16 divided by 5, so how much? 3.2 will be the answer. Okay, but what the question is, not affected by. So when I'm changing the extreme value, okay, so here our answer is going to be changed. But when you calculate the median, so what do? You just take the numbers, that is 1 2 3 4 5, these are the 5 numbers, so I'm taking off 2, the middlest value is 3, so 3 is option. If I'm changing over, this is a, if I'm taking the last one, that is 5th original value, so is there changing in value of the value of the middle value? No, there is no changes in the middle value. Okay, if I'm changing with 6, the extreme value I'm changing with 6, or either in the 7 or the 7, so in that condition also, when we are calculating the central tendency with using the median, when I'm using the median, when I'm changing the extreme value, I'm just calculating the median. So the extreme value, if the extreme value changes, there will be no effect on the value of the median. But when I'm changing the extreme value with any other thing, so in that condition, the mean is the arithmetic means, you can say arithmetic mean, you can say geometric mean, you can say harmonic mean, it will going to be changes. The value of that particular central tendency is going to be changes. It's also applicable to the mode also. But the thing is that it will not applicate, that is not affected by the extreme value in case of median. So what is median? The positional average. The median's another name is called as positional average, that is a median. Get it? So option number 3 is correct. What is the financial management? You know, what is the financial management? The words having their hidden meaning. Okay, so what is the finance? Finance means for running the business we need a finance, we need a money. Okay, and we collect this money from the various sources, and this is a, that's the amount we have collected, that is a finance. Okay, and how to manage this finance, because the collecting the money is not only things you have to do, just yes, you have proper how do you manage properly this, this is the how do you manage the things. Okay, how to manage the money, how to manage your finance, so this is an important concept, that is a management. So how to manage your finance, this is the financial management. And you know that who is uh, who is manage this activity, who is responsible for the managing the finance? So manager having, this is a managerial activity. So this who manages the finance, the manager. And that's why the financial management, it is a managerial activity, because it is the managers having responsibility to find to control, to plan the proper, in a proper manage, to budget your finance, okay, of the company. Okay, so what manager do? Manager do the planning, proper planning, and for planning for how to manage this finance, how to collect this finance, how to budget this finance. Okay, and this also all things. Okay, and how to control it, because this is an important, you are planning for the how to use it, but also the controlling is a really most important thing in the finance. Okay, in anything, if you have a control in your ideas, if you have control in your savings, so your expenditure, so you, whatever the finance you have collected, whatever the money you have collected, if you have the quality of the planning and controlling, so the manager having this activity, and the financial management is a having the two important thing, that is the financial finance planning and the controlling. So this is a firm's financial resources, how the firm's financial resources is controlled and managed and planned by the manager. And so that's why this is a financial management is a managerial activity. Okay, which held the planning, controlling of the financial resources. Clear it? Now the wealth maximization. What is the wealth maximization? The concept of the wealth maximization is important in the financial management. Why it is important? Because financial management is before your earlier day. You can see that there is profit maximization is a main thing of the any organization. But nowadays they are more focusing on the wealth maximization. Why they are more interested in the maximization? Because maximization having the two main concept, that is they duty if they giving more concentration to the wealth, so they are the market share of the company going to be increases. Okay, goodwill going to be increases, goodwill going to be increases. Okay, and the status of the company is going to be increases. So this is a wealth maximization. And if your market share is going to be increases, your profit going to be increases, your goodwill and the reputation going to be increases in the market. So if you are focusing on the wealth maximization, it's ultimately you fulfill your two things. But if you are focusing only on only profit maximization, there is some issue. There is not possibility that the market share of the company going to be increases. Well, reputation, maybe for the maximizing their profit, they use a cheaper quality of the product, or the anything. Okay, just mislead the customer, mislead the other market. Okay, so that's why they are now the concept of the wealth maximization is a higher in the peak, and the main concept of the any organization having the wealth maximization. And the wealth maximization is a primary objective is, yes, they are reflecting their earning per share. They're giving the importance to the EPS, earning per share, because earning per, if your price of the earning per share, that means how much amount per how much amount you earn in your per share amount. Okay, if your earning per share is increased, market price of the of share is also going to be increases. So they are more giving the more focus on the earning per share. Okay, so that's why the having the financial management says the main objective of the financial management is a wealth maximization, not profit maximization. Because if you increases your wealth, it ultimately increases your wealth profit. Okay, and they give the more focus on the earning per share. Okay, because if your earning the per share is increases, market price is going to be increases. Now the function of the financial management is of the financial management can be broadly classified into three major decisions. What are these decisions? These decisions are the investment decision, financing decision, and the dividend decision. So what is the investment decision? So how the finance, when you collect your finance, okay, so the when you collect your finance, you have to think about your investment, where you are investing this money, where you are utilizing this money. So for investing this money, you have two more things, that is capital budgeting and the working capital management. First thing, capital budgeting is the long term concept, and the working capital is a short term concept. Okay, is a short term concept. Clear? It's a short term concept. Now the working capital is for the whatever the capital is here, whatever the capital you have generated, whatever the finance you have generated. So the capital word is used for the long term, that's why is used capital budgeting. So how do you manage, how you budgeting your capital? So this is the important thing. That's why we will study this capital budgeting in the investment decision. Clear now? Yes. Now the working capital, yes, working capital is, that means what is a working capital? How do you calculate working capital? Current asset minus current liability. Yes, sure. Yes, so here we are talking about the current asset and current liability, and current asset and current liability having a short term concept. Yes, so that's why the working capital, how do you manage your day to day transaction, or the within the year transaction, within the year finance. So that's why you prepare your working capital in the fund flow statement. Yes, yes. So these are the that is capital budgeting and working capital are the part of the investment decision, because you're investing your money. Okay, now the financing decision is related to your how do you construct your, how do you structure your capital. Then financing, that means whatever the finance you have collected. Another things that you say, how do you finance it? So the cost of capital, the how much cost of capital you have to be pay. That means if you are collect the finance from the external sources, so how much you have to pay. If you're collected, so you have to be liable for the payment. Yes, so how much cost of the capital, matlab if you're collected your capital, if you generate your finance, so how much you have going to be paid to your parties, to the house, to the party who you are liable, okay, who or the company is liable. So that's why what amount of the cost of capital they need it, okay. So give, and after the capital structure decision, how it is, how it will be your capital structure, okay, from where you generate capital, from where you pay the capital. So here is it is your generated your capital structure is like they are talking about the cost of debt, cost of equity, cost of capital. So these are the things we have discussed in the cost capital structuring decision. Then the leverage having the operating leverage and the financial leverage, and the combined leverage. So in the operating leverage we are discussing about the operating things, okay, and in the financial leverage we are discussing about the financing things, okay. So here the operating leverage and the financial leverage, you know that there is an EBT, IT divided by sale, okay. This is operating leverage, because operating leverage is related to your sale and earning before interest and tax. But the financial leverage is leverage which is related you okay. I will shortly tell you about that. Is there is a structure from the sale. We will when we will deduct the working capital, we will get a contribution. From the contribution we will deduct our fixed cost, so in that case we will get a profit. So this is a profit, that the profit which is earning before interest and tax, okay. And from this profit, when we deduct our interest, so it is a earning before tax, okay. And after that, when we deduct the tax, so we get uh, earning after tax, okay, earning after tax. So this is a amount, this is a earning per earning shares, earning, okay, earning share. When we from the um earning after tax, we divide earning after tax in the numbers of the equity share you can say. So then we will get what we will get, we'll get the earning per share, okay. So this is a format, we will discuss it later, but I will quickly tell you, I will quickly just give the overview of this. So here is, you can see this is till this, okay, till this is the operating leverage, okay. This is the operating leverage. After that, these all the things are it's related your financial leverage, okay. So if you see the formula of the operating leverage and the financial leverage, you can see that in the financial leverage, the formula of the financial leverage is financial leverage is earning after tax divided by EBIT. And when we calculate the combined leverage, so the formula is going to be uh, E earning after tax divided by the sale. So this is a formula of the, so how do we calculate it, how, so when we get to multiply this for operating leverage or financial leverage, you can cut this EBIT. So in this way I get the, so in the numerator earning after tax, and the numerator you can see there is a same. So that's why the combined leverage having this formula, okay. We'll discuss it later when we see this call the concept, because these concepts are really important for your examination perspective, okay. And the problems is asked from this question. Now let's move toward the dividend decision. So in the dividend decision, what happened in the dividend decision, they will discuss about the two things. Dividend is related to your equity, clear it, okay. Yes, it is related to your equity, yes ma'am. Now what to the equity shareholder, what the company pay, they pay the dividend, okay. So they having a dividend policy, because you, if you see the structure of the company, you can see the main, they have a more they generate a capital more from the equity share, okay, and less from the debt, and less from the other, and less from the some other things. Okay, so here is there the maximum portion is related to your equity. That's why they are thinking more for the equity share, because equity share having a voting right. Equity share are they are having a right to involve in the involve in the company's affairs. Okay, external internal affair. Okay, so that's why they are more concerned about the equity share, because they have a right to take a part in the company. And other the debenture holders and the other one do not have that right. They're just liable for their payment, this liable for their interest and nothing else. That's why we are thinking, that's why the company thinking about more. That's why they make a dividend policy especially for the equity shareholder and the retain earning. Yes, retain earning, because whatever the because we pay the dividend to the equity shareholder when we earn the profit. Yes, but most of the time company think that they are not paying the dividend. They just whatever the they are earn, they have to retain for the future future um expansion of the company. Yes, okay, that's why they retain earnings. So these two comes in. Either we pay the dividend, either we retain our profit. Okay, from the profit, either we pay the dividend to the equity shareholder, either we retain this profit. Okay, to utilize it for the expansion of the company for the further for in the further year. That's why the dividend decision is made. So these are the three concepts are really important in your financial management. Clear it? Yes. If you have any difficulty, you can comment me in the comment box, or you can message me. Okay. Or that's for the and that's problem we will discuss in the next lecture. Due to some issue, we will not live today. So from tomorrow we will be live. So there will be no problem for you. Yes, yes, I have already discussed with you, that is a investment decision, financial decision. So I will just quickly reading this all the concept. That is, investment decision is concerned with the selection of the asset. Yes, it is selection of the asset in which fund you will be invested by the firm. Okay, and the asset of the business firm include the long term assets like a fixed asset. Okay, okay, and the short term asset like a current asset. So for the long term investment, we have already say I have already said that is a long term investment, where decision, whatever the decision we are taking, it's called as a capital budgeting. Okay, and for the short term investment decision, identified as the working capital management. Okay, now you get it. Yes. Now the financial management, the financing decision. Yes, the financing decision is a concern with the capital mix. What are this capital mix? We will discuss it later. Now the financial mix. Okay, then the capital structure of the firm. These are the things. Okay, the terms capital structures refer to the proportion of, this is important, which I have already discussed in this last last slide. So you can see these are the capital proportion. So the debt capital, that is, this is a debt capital. Then the equity share capital, that means KE, and other one, that is a cost of capital, is important. The financial decision of the firms related to financing makes and thus must be decided, taken into the account the cost of capital, that is a KO. Okay, risks and return to the shareholder. Risks and return matlab how the risks involved, because equity shareholder, they are a risk taker. Okay, because some when the share company earn the profit, they will get a dividend. If the company earn profit, still the so many times company do not distribute his dividend, they retain their earning. So there is a risk for the equity shareholder, and the equity shareholder is called as the owner of the company. Okay, that's why they're taking a risk. Okay, then they the return, if they are taking, if they are receiving the return or not. So that these are the terms we have discussed, we will discuss in the financial, we had discussed and we will discuss in the financial. When we see this, we will discuss it all the in the later. This is a foundation you have built. Okay, this after that, this is a foundation, you have to just understand the terms. Okay, now the dividend decision. Yes, the dividend decision policy decision are concerned with the distribution of profit. okay, of the firm to the shareholder. We have already said to whom we give the profit as a dividend to the shareholder. How much of the profit should be paid to the dividend, and the dividend payout ratio. This is an important thing. Okay, dividend payout ratio. This is important thing, because if the company declare his dividend payout ratio, according to that, at the shareholders are interested to invest their money in the firm, in the company. Okay, so the dividend payout ratio, we'll discuss it, don't worry about it. Okay, so dividend payout ratio is important, and the decision will depend upon the preference of the shareholder, investment opportunity available within the firm, and the opportunity for the future expansion of the firm. So ultimately, dividend payout ratio is calculated or they declared by the company, because shareholder, on the basis of that, shareholders, they find the opportunity within the company, and for not a today's expansion, not it's for the future expansion of the firm. Okay, yes. Now the source of the finance, yes, source of the finance are the equity, debts, debenture. Okay, from the source of finance, that means from where they collect source. Okay, and the retained earning, terms loans, working capital loans. Okay, letter of credit, yes, letter of credit, euro issue, they issue the euros, and the venture funding. Okay, so here is venture funding. Sorry, venture funding. Sorry. Okay, now, so here is a source of fund. Okay, give me a second. So what is a venture funding? You can say venture funding is it is a sum of money that is investor committed for the investment in the earlier stage of the company. Okay, in venture funding we also called as it is a venture capital. Okay, you have heard might be the concept of the venture capital. So venture capital, this is the amount which the investor has committed in the earlier stage of the company. Okay, earlier when they just started their business, or the short term business or the long term business. So this is a venture funding. Okay, for any startup of the company or the small businesses with a long term growth potential, they having a long term growth potential, so this is a venture funding. Now, yes, now here we are going to discuss the source of financing, from where they collect what are the source of the financing. Okay, so here are the source of financing are classified according to their basis of timing, basis of their ownership and control, and the basis of their source of generation. So here is on the basis of timing, you can see there is timing is based on the long term, medium term, and the short term. Yes, yes. Now in the long term, what happened? Long term, that means they are long term involved. Therefore, the long term they are involved in the company. Okay, so the equity shareholder for the long term, preference shareholder for the long term, internal accrual. Internal accrual means, that means anyone who is of the owner of the company, either or the family relatives, they are internally accrued in the business, or they are internally accrued if the family members, if the owners. So that's why they are they are staying for the long term. Yes, now the debenture holder bonds having the long term capital, then the terms loan is also long term. Venture funding, we have already discussed what is the venture funding, when it is in the initial stage of the company. Then the initial who initially pay the for the uh, in the initial stage, who is involved in the formation of the company? Yes, owner, either the relative. They if you want to open your company, if you want to open your open your firm, so what you do, you collect money from the from directly from the equity shareholders, from the sharing the or issuing the share in the market. Not, it's not possible. First stage, if you see you find that if, how much amount you have, how much you have amount you will collect from your relatives, and how much amount bank is giving the loan. So the bank loan is also the long term financing. Okay, and the asset securitization, in the asset securitization, what happened there? um what are the asset you have, you're securitizing this asset for the funding for the long sources. Okay, then the international financing like a euro issue, this was also foreign currency loan, ADR, American depository receipt, GDR, global depository receipt, these all the list of the long term finance. Okay, then the medium term finance having the financial preferential debenture is also maybe in the category of medium term. Okay, you can see there's a preference shared debenture share is it comes under the category of, maybe it comes under the category of medium term. Then the medium term having the financial institution, government, they take a loan from the commercial bank, lease financing, hire purchase financing, they having a medium term because they're having a specific time duration either from the 2 to 5 year or the 2 to 10 years. So these are the times, so this is a medium term. And in the short term, what they have, it's a less than, it's less than 1 year. Okay, if it is having the less than 1 year, so this timing is for the short term. Okay, either you can say less than 18 month. Okay, 18 month, so this is a short term. Now the credit, trade credit, that is a creditor. Okay, or the short term loan like a WC loan. Okay, fixed deposit or the less than 1 year. Okay, equals to the less than. And the advance received from the customer, creditor, payables, factoring services, a discount, bill discounting. So these are the terms of the on the basis of the timing you have categorized in the short term. Now on the basis of the ownership and control, so owned and the borrowed. So who is the own? So equity share, equity capital are the own. Okay, now the preference capital are the own, retain earning as the own, because whatever the earning you have earned, you retain for your more expansion of your company. So that is your own profit, own things, that is you have retained for your expansion of the company. Okay, then the convertible debenture, convertible debenture is also owned. They can convert the debenture in the equity, or equity holders can yes, they can convert the debenture in the equity. So this is also an owned debenture, because this, or this convertible debenture is issue only and only to the internal to the owner of the company, to the, okay, not the outsider, not to the outsider. Now the venture funds or the private equity, these are the own. Now what is the borrowed? Borrowed from the financial institution, borrowed from the commercial loan or the debenture. So debenture is a, when the single debenture or unconvertible debenture, this word is used, in that case it is a borrowed. But whenever the convertible debenture word is used by the questionnaire, or either you can see in your question paper or in your book, so it will be, it is it will be in your mind that is a convertible debenture is your own debenture. Clear it? Now the basis of the source of generation, the internal and the external. So in the internal, what happened, the internals having the internal sources like a capital equity, preference capital, retain earning, convertible debenture, we have already seen in the own. So own is nothing but he is having the internal control, internal source of generation of the fund. Okay, now the external having the retained profit. So here don't get confused in the retained earning and the retained profit. What happened? Retained earning that means they save whatever the profit. Okay, whatever the money, whatever the capital, the whatever the capital is collected, or the or you can say, that is, if you are generated from the owner of the company, so you retain your profit without giving to the dividend equity shareholder. Okay, if you am the owner of the company. Okay, so I have if the company earn the profit, so what I do, I'm not taking the dividend from my own company. What I do, I am just wanting to expand expand my company. So what I do to retain that earning, to expand the company. So this is a retained earning, but the retained profit is a external, because whatever the profit you are on, you have to pay to the debenture holder. Yes, to the debenture holder in the form of interest. And to the as a loan which you have taken, or the creditor. Okay, so that's why the retained profit is a different thing. It is an external source, and retained earning is an internal source. So don't confuse. These are the two terms are really confusing, and they ask the question from this concept. Okay, so for confusing you more, generally they ask this type of statement in the statement question. Okay, assertion reasoning question. Okay, then the reduction of the working capital. This is also an reduction of the working capital. Okay, so this is an external thing. We will discuss it later. Then the sales of asset, it is an external source. Okay, if you sell your asset, so you sell to the outside party. Okay, you sell the asset and you earn the money. Okay, so this is a sale of asset is also an external source of generation. Clear? Now, let's see the basis of the period and the basis of the ownership and basis of the generation. So long term for the equity retain, earning preference, debenture, and the loan from the financial institution. For the medium term, we have already seen that is loan from the bank, public deposit, and the loan from the financial institution. We are just revising. That's why I'm taking this slide. This is this slides in this form. Okay, yes. Now in short term, trade credit factoring. Yes, factoring is important thing. We will discuss it later. And here is a commercial paper. So what is a factoring? So factoring is a financial transaction types of the debtors finance, in which the business what do they sell its account receivable to the to whom, to the third party at a discount. Okay, that means you're factoring your finance. Okay, whatever the debtors you have, you need a money. Okay, you need you urgently you need money. So what you are doing, you're just going to the bank and just want to factoring this. That means you have you just want emergency money. So what you do, you go to bank. Here is a data. Okay, and here's a client first. So the ask for the, so what did they go to the bank. Okay, and what the bank do, uh, forget it. Okay, so what the bank do, I'm just this is a I'm just telling you that is a, okay, this is a debtors and you are a debtor. Now what you do, you need urgent money, so you're going to the bank. Okay, you're going to the bank, and for whatever the certificate or whatever the money you have. Okay, so A is a person and B is a company. Okay, so A is a okay, A is a in simple word I will tell you, that is the client. Okay, in which I will going to explain you. Okay, just give me a second. Okay, so factoring means, in the simple word, factoring means when you are want a money. Okay, you're a you're a company. This is a form. Okay, this is a form, and you're a data. What you do, you sell a material. Okay, and you sell a material to this company, and this company have not paying the money. He is giving us so suppose he is giving the hundi or either anything and a certificate that he will pay the money after 2 months later. Okay, 2 months later. So but what happened is, you urgently you need a money, so you go to the bank. And okay, you go to the bank, and what you do, you say to the banker that is, I need a urgent money, so this is my debtor certificate. Okay, so this is my hundi. You have to keep this hundi it's yourself, give me some money. So this is hundi amount is 10,000 rupees suppose. So so the bank what to say, bank say that I will deduct the discount, or I will deduct some money for what, because of there is an uncertainty, either this form is going on doing the payment to the bank or not. That's why what he charged, suppose he charged 2,000 rupees. Okay, so the now sorry, now 8,000 rupees. Okay, now the 8,000 rupees, now the 8,000 rupees is the company get the 8,000 rupees of when he pay the kundi of 10,000 rupees, because he need urgent money. So he said, yes, okay, I'm okay with it. Give me 8,000 rupees. You take this 10,000 rupees a hundi with yourself. Okay. So now when this client come to him, he said your hundi is under the under the under under in the under the custody of the bank. Okay, so client go to the bank and he pay his whatever the pay 10,000 rupees to the bank. Okay, and he will get the hundi back. Okay, so here what is happening, the bank is receive 2,000 rupees from here and 2,000 rupees from here, extra 2,000 rupees. So how much profit the bank gain? 4,000 rupees. So this process is called as a factoring. Okay, so the business will sometime factors is reversible asset to meet is present and immediate cash you need. Okay, that's why he is doing. No one interested if you do not have a immediate need of cash. So why the debtors or why the company is suffering from the 2,000 loss? He's not interested because they having immediate cash need. So they are going to in the source of the factoring financing. Okay, so this is important. Immediate need of the cash in present need, meeting the present need. Okay. Yes. Now, on the basis of ownership, you can see ownership have equity and the retained earning. In the borrowed fund, there are debenture, loan from the bank, public deposit, and the loan from the financial institution. Internal source of financing in the form of a source of generation, they generate from the internal source and the external source. In internal, they having equity share and the retained earning, and in the external, the financial institution, bank, public deposit, debenture, and the creditor. Yes. Now, what is a bond? Okay, so bond is the issue by the organization for the period of more than 1 year, more than 1 year to raise the money by borrowing. So this is a bond, and this bond is generally formed debt. This is a form of debt, okay, which the investor pay to issuer. Okay, who pay? Investor pay to issuer for the defined time frame. Okay, so this is a bond. Yes. Now, what is a plain vanilla bond? So, plain vanilla bond is the simplest form of bond with a fixed coupon and defined maturity is good. The date of the maturity is given and usually issue and deemed at a face value. Okay, it's always the issue in the face value. This is important. At a face value. Okay, and it's known as a straight bond. Also, you can known as a bullet bond. Okay, so they're having a different name. Plain vanilla bond, straight bond, be having the defined maturity, and they deem to issue in the face value, and the bullet bond. Okay, because bullet is going to be straight. Okay, that's why. Sorry. Now the zero coupon bond, which do not carry periodic interest payment, do not carry periodic interest. They are not interested in the interest payment. Is called as a zero coupon bond, and issuance of these bonds are made at a step discount over its face value. If he use the word step discount or the discount over the face value, so it is a zero coupon bond, or you can say zero coupon bond, repaid to the face value at a maturity. When they issue it at a discount, but when they paid it at the face value, okay, when they repaid it at the face value, that is a zero coupon bond. Okay, and the deep discount bond, types of zero interest bond which are offered for sale at a discount value and deemed to be at a value on its maturity. Okay, that is a deep discount. Okay, now the perpetual bond is a types of bond pay a coupon rate at a face value. What? At a face value. Okay, till the life of the company. Okay, till the life of the company through the perpetual miss forever bond with a maturity above the 1,000 year. This is important. Above the 1,000 years are also considered to be the perpetual bonds. Okay, they having a maturity more than or above the 1,000 year, 100 years, sorry, 100 years. Okay, so this is a perpetual bond. So you can write here there is a more than 100 years. Okay. Now the next, that is a debenture. In layman's terms, the debenture is a knowledge acknowledgement of the debt to the organization to take into the public at large. Okay, and the debenture are the debt instrument used by the company and the government to issue the loan. That is a debenture. You know what is a debenture? The simplest way, it's terms as a loan. Okay, it's an external source of finance. Yes, so is the issue to the corporate based on their reputation at a fixed rate of interest. If they having a corporate, they having the more reputation in the market, so they pay the fixed rate of interest. Okay, there is a high rate of interest. If they having a low reputation in the market, so their interest rate is low. Okay, but they whatever the interest they are paying, they fix for the period. Okay, now the convertible debenture, the other debenture, you know that convertible debenture is a internal source of finance, we have already seen. Okay, and the convertible into equity shareholder, yes, I have said that. Why it is a comes in the internal source of finance? Because it you can convert the debenture in the equity share after the expiry of the specific period. On the other hand, non-convertible debenture is these which cannot be converted into equity share. Now what is a redeemable debentures? Redeemable debentures carry on a specific date of redemption on the certificate, and the company is legally bounded to repay the principal amount to the debenture holders on the date. On the other hand, so here is what is a redeemable debenture. So redeemable debenture is carry on the specific date of the redemption of the certificate. Company is legally bounded to repay the principal amount to the debenture holder on the date of debenture. So redeemable, that means you can redeem this debenture. That means you can transfer this debenture. Okay, so these are the redeemable debenture. Then the irredeemable debenture, also known as a perpetual debenture, do not carry any date of redemption. No date of redemption is given, no date of transfer is given. So this is a irredeemable. Now pari passu debenture, this is an important. Pari passu debenture means equal in all respect, at the same pace or the rate, in the same degree or the proportion, or enjoying the same right without bias preference. Okay, then the secure debenture which are discharged ratably, so though issued at a different dates, and also called as a debenture with a pari passu cause. With a pari passu cause, a debenture holder is assure for getting the payment in the pro rata basis. This is important. In the peri passu, what are they doing? They are repaying. Okay, on the basis of pro rata basis, between the debenture holder, in case of insufficient, if the company having the insufficient of the fund, if company having the insufficient of the assets of the company. So this is a peri passu debenture. There is a you can say there's a same degree of proportion, they enjoy the same right without bias of the bias or the preference. Okay, this is also a secure debenture, and which are discharged ratably through the issue at a different date. Okay, this is not fixed day. So this is called as a debenture with pari passu clauses. Okay, yes. Now the equity share. Equity share are the main source of the finance firm. Yes, you know that equity share, the general public and the equity shareholder do not enjoy any preferential right with the regards to the repayment of the capital and the dividend. They do not enjoy this right of the, if they will pay their whatever the capital they have invested, or they do not liable for the, they are liable for the dividend, but they not having the preferential right. That's it. They are entitled to the residual income of the company, but they enjoy the right to control an affair of the business, and all the shareholders are collectively are the owner of the company. Yes, owner of the company. Equity shareholder are the owner of the company. They enjoy the whatever the affairs, they control the affairs of the business. They having a rights to attend the meeting, they having a rights to take part in the day-to-day transaction of the company. Okay, they have a rights, yes, but they do not they are now do not having the preferential right to for the any repayment of the capital and the dividend. Now the preference share having the just a little bit difference, that is they also had a owner of the company, they are common as a equity share. The payment of the surplus dividend, the preference share are the first to get a dividend in case of the company decided to pay out the dividend. In case of equity share and the preference share, so the preference share having the first right, he has the first right, and after them the preference shareholder equity shareholder will get a dividend or the repayment of the capital, and the owners of the preference share get a fixed dividend. However, in the event of the liquidation of the company, they are paid after the bond holder, yes, because they are the long term and they are the external source, that's why, and the creditor, but before the equity. This is a right. Now cumulative preference share. So cumulative preference share and the participative preference share. So cumulative preference shares are said to be cumulative when the arrears of the dividend are cumulative and such arrears are paid before the paying any dividend to the equity shareholder. Suppose here's a example is given. Suppose company has a 10,000, okay, 8% of the preference share of the 100 each. So the dividend for the 2017 and 18 have not been paid so far. The director, before they can pay the dividend to the equity shareholder for the year of the 2019, he must pay off to the preference shares earlier. Okay, so preference share having the, in case of if he is a cumulative preference share, if he carry a cumulative preference share. Okay, so in the participative preference share, what is the in the participative preference share, you can see there are the those shares which are entitled to the additional to the preference dividend at a fixed rate to participate in the balance of the profit with the equity share after they get a fixed rate of dividend at their share. That means in the participative preference share, they also having the right to participate in the transaction of the company. So once, if after your after the company is paid fixed rate of dividend or the profit from the profit. So if company pays, suppose I will give the example. If suppose company having the earning after tax, okay, so he has a money of 10,000 rupees. I'm taking a small amount. Okay, you can say 10 crores rupees. Okay, so 10 crore rupees. So here what is they pay to the preference shareholder first. So preference shareholder they pay, suppose all total preference share is 3. Okay, so how much they remain? 7. So 7 is goes to in the hands of equity share, but when they are paying the equity shareholder, if anyone purchase a participative preference share, so from these 7, they also give the some amount of the fixed rate of dividend to the participative preference share. Okay, from this amount also, whatever they remained in hands of equity shareholder. Okay, yes. So it is a participative preference share. Then the leasing, operating leasing, and yes. Let so here we are overing over here. We will discuss it all it later, because these are the related terms, leasing and financial leasing. Okay. So before I go ahead, I will just quickly tell you about how to download the Global Online. So the Global Online app is how to download the Global Online app. Just go to Google Play Store, just download the Global Online and register with your number. Go to my course, search the commerce subject. If you have management subject, so you can get in the register with this contact with the this course. And after that, once you register, here there's actually the interface is look like that in the app. So here you will the unit wise all the materials is given in your app. So do study, you can do study very well. Okay, here can I finish it? Yes. Uh, yes, I will finish it over here. Now the leasing can be defined. So what is a leasing? Leasing is can be defined as a right to use an equipment on the capital goods on the payment of the periodical amount. So these are the two principal parties to any lease transaction. So they are the to lease. Leasing, that means your what is leasing? Leasing means there is a right to use the equipment or the capital goods on the payment of the periodic amount. That means if you're having a machine, okay, if you're having a machine, you have a if you have you just you are not to do much use of this machine, so what you do, you just leasing your machine. Okay, when you're leasing, so the specific amount, either you have a house, okay, either you can say the house, okay, you having the extra flat, so what you do, without what you do, you're just renting this house, so you will get monthly amount, fixed amount, okay, 10,000 rupees or 20,000 rupees a monthly amount from using that equipment or using that capital goods. So this is a leasing. So leasers are leasing having the two terms, that is one is a leaser and the second one is a leasing. Who is a leaser? Leaser means who actually owner of the equipment. Okay, if you are a owner of the equipment, you are the leaser. Okay, and who actually use the equipment, who use it. Okay, your your tenant. Okay, so these are the your this is is a leasing. Okay, who use particular equipment, who use particular house for living in in that house, so these is called as a leasing. Okay, who is using your equipment is a leasing. Who the actually owner of the, who is actually owner of the equipment or the capital goods, is a leaser. Now the operating leasing is leasing transaction. The primary lease period is a short, and leaser would not able to realize the full cost of equipment and the other incidental charges. So this is operating, that means it is for the short period. Okay, the period is very short, and the leaser would not be would not or you can say would not be able to realize the full cost of equipment in this, so he can charge it when he use that particular suppose if you're leasing your machine. Okay, in machine, so if you're having a machine of something whatever, okay, if you're having a machine, some kind of machine, but you are leasing it the per hour, you're charging for using that machinery per on the per hour basis, on the per hour basis. Okay, suppose the per hour charges is 1,000 rupees, or you can say 500 rupees. So this is a operating lease. Okay, how much you are using for the short period, so it is a operating lease. Okay, and there is there on the during the initial lease period, the computers and the other, like, yes, the computer, I have got it, the example of the computer, you know, that there is in a cafe. Yes, cafe. The cafe, for using the car cafe the per hour the you pay as in the when you go to the cafe for filling the forms or some other other important things. Okay, whatever the work you have, so in that case you pay as per the hour or as per the use of the computer. So this is a kind of operating lease, and the official equipments are the very common asset which is subject matter of the any operating agreement. Now the financial leaves is this against to the temporary nature in the operating. Yes, this is a financial lease is for the long term. Okay, this is a long term agreement which is generally for the full economic life of the lease asset. Whatever the full economic life of this asset, you have to pay for the full economic life of the asset. Okay, and the financial lease involve the transferring the almost all the risks incidents to the ownership, and benefit arises there from the exception, like financial leasing. Yeah, like you're purchasing TV or purchasing car in EMI. Okay, on the EMI basis, what you're doing, you're paying the monthly installment to them, but you have get a ownership of for your lifetime of the company. So if you want to sell it, you can sell it in the middle of the in any year, but you have to pay the amount to the from where you purchase it. Okay, so this is a big example of the financial lease. Then the sales and the lease bag leasing. So sales and the lease back leasing is under the agreement of the asset which already exists, is issued by the leasee in the first sold to the leaser for consideration in cash. So what you are doing, you are selling or lease back leasing, that means whatever you are leased to the leasee, so in that case a leaser having the sale the same thing to the leasee. Okay, so this is a leasee is a first sold to the leaser for the consideration in cash. The same asset is to acquire for the use under the financial lease agreement from the leaser. What I said here, that means whatever you have taken the I give the example of the car. So it is what you have purchased it, yes, but you are finding that you are unable to pay the EMI of the car. So what you do, you sell or lease backing to the leasee. That means either you sell to another party, or either you can sell it to the company from where you purchase that particular car. So that is a sales and leasing back of lease. Okay, then the leveraged lease is an agreement where the leaser finances the leasee by taking the loan from the lender. Okay, and the party leasing the asset any pay the leaser and monthly. Okay, so the leveraged leasing is on the basis of monthly, and leaser is in terms of the remits the payments to the financing company, and this allow the leaser to provide a lease and the profit from the lease even if the individual leasee the asset do not have the income to obtain the lease over, right? So what is over here, that is a lease is a kind of agreement, okay, where the lessor finance the lease by taking a loan from the lender. That means what he is doing, he taking a loan from the lender. If you want some machinery or machinery kinds of machinery, but you do not have the money, okay, so what you do, you take a loan from the bank. Okay, or you like is a best example for the home loan. Home loan is the best example, or you can say the car loan also is available. So what you take for purchasing this, you have take a loan from the bank. Okay, and after that you have to pay the monthly money. Okay, but the party leasing asset pay the lessor monthly installment. Okay, and the lessor in terms or remit the payment to finance company, and this allow the lessor to provide a leasee and the profit from the lease even if the individual leasee in the asset do not have the income to obtain the lease outright. Clear? So best example for this is home loan. You can just the example is more important. Whenever you learn something, if you take in the mind, whenever you read leverage leasing, you just keep in your mind the home loan. Whenever you read about the say it or lease back of leasing, you have to just keep in your mind that is the yes car EMI or some okay, car EMI is a best example, you can sell it. Okay, or the machinery EMI, big machinery EMI. Then the financial leverage, financial leasing, that is it is your either you can, this is also kind of when you are paying in the car EMI, whatever you are purchasing in on the EMI basis. So these are the comes in the financial year for the long period. This is important. Yes, now the next, this is the last thing, that is a break even lease rental. That is a shit is a short form BELR. That is a break even lease rental. So the break even lease rental can be form of the both point of view, from the lease view as well as a leaser point of view. So the both point of view is important. What is a leaser's point of view, and what is a lease's point of view, and what is a leaser's point of view over here. Now the break even lease rentals in the point of view leasing, the rent at which the leasee is indifferent between the borrowed and buying option. So he and the lease financing option at the rental net advantage of leasing will be zero. So what a leasee think, he think about either he buys machinery, or either him borrow on the way on borrow the, suppose he found that he, suppose if he wants some machinery, so when he buy this machinery he has to pay 10 lakh rupees. Okay, 10 lakh rupees at a time. okay, or in the form of loan or EMI, whatever. Okay, okay. So if 10 lakh rupees this one, and if you take a loan from the bank, so he has to pay some suppose 1 lakh rupees as a interest. So how much amount he has paying, that is 11 lakh rupees, suppose. Okay, rupees. Now when if he borrow this borrow this some machinery, so he has to pay yearly, he has to pay yearly, suppose yearly, 1 lakh rupees, suppose 1 lakh rupees. Okay, 1 lakh rupees, either you can say uh 1,20,000, that is 10,000 rupees per month. Okay, so how much, so this is amount is for the 1 year. Okay, so he was thinking that he is paying the 1,20,000 rupees for the over the period of the 1 year. So it's a depend on the leases point of view, either he is liable for paying the 11 lakh rupees at a time, or he is liable for the 1 year of the either he is borrow this particular machinery, and he pay the yearly 1,20,000 rupees, and he earn the more than suppose 5 lakh rupees in a year. Okay, so here what is happening here, so it is whatever the decision he will taking, so all the decision is depend upon his on the basis of buying behavior or on the basis of the borrowing behavior. Okay, so this is a break even lease rental in the point of the leasing. And then what is the point of the lessor? So lessor thinks about that is the minimum flows of the lease rental, and which is should accept in case of the net advantage of the leasing. How much net advantage they are gaining, how much net advantage he will be should be zero in which point of time. Okay, so the same thing the leaser also decided on the basis of their rent, either either suppose is he having his is flat. Okay, so he was thinking he is getting the 20,000 rupees per month. So how much he will get the year? 2,40,000. Okay, 2,40,000. Okay, in a year. And if we sell out in the one time, so he will get a lump sum amount of suppose lump sum amount of 30,000 30 lakh. Okay, 30 lakh. So it's depend on the leaser what he want. He want 2,40,000 yearly, or he want a 30 lakhs at the same time. Okay, so it's depend upon the point of view. Is if a seller have a need of money, if he a seller, he do not interested in interest or rental amount, so what he do, he sell it at 30,000 30 lakh rupees. Or either he is not want to sell his property, so what he do, he give the his property on the rental basis, or on the 2,40,000 in the per yearly. Okay, so it's all over is depend on their point of view. Clear? Let's start with our first topic of today, that is fund flow statement. So what is a fund flow statement? So what is a flow? First understand what is a flow. Flow is nothing but a movement. What is it? Is a movement. What is a fund? Fund that means a capital, the capital which company need to flow his company smoothly. Okay, so the fund flow is nothing but a movement of fund from inward to outward. That means it means inward and outward movement of the fund of an enterprises, of an a company, of an a firm. Okay, it either be a partnership. Okay, it's either be a sole trader. So where they getting the fund and where they investing their fund. Okay, where they are utilizing their fund, that is and which statement is show this all the movement of the fund from inward to outward, from the source to application. Okay, so this is your fund flow statement. Clear? Basically the funds denote the working capital. Okay, and working capital. Now what is the working capital? Working capital is nothing but, when we are talking about a gross working capital, is nothing but your current asset. Okay, when I'm talking about the net working capital, that means your current asset minus current liability. From your current asset, when you're deducting your current liability. And actually what is the use of the working capital?
the working capital actually is show the requirement of the day-to-day requirement of the operation, that means company's operation. Okay, so they need a working capital, and working capital is nothing but your cash equivalent. They, and from the cash equivalent, if they having the cash, they purchase a raw material, they can convert into the finished goods, and once they convert into finished goods is the company sell it, and once they sell it, after they will get a bill. Either you can say it a cash, or either you can say something that is equivalent to the cash. So again the company get a cash, again it utilized for the purchasing raw material, again this circle is going to be running. Okay, so this is working capital, and that's why company need a fund. Okay, so fund flow means a movement, which I have already told you, that means a changes. Okay, fund flow analysis is an analysis of the fund flow of the fund from the current asset to the fixed asset. That means, what is that? Current asset is nothing but your cash. Okay, and fixed asset, you know that what is a fixed asset? That means fund flow means when you, the company having the fund, what he utilize is cash, utilize is current asset for purchasing some either in investing in somewhere else, investing in purchasing some shares or something else, something bonds of the government bond, or either he purchase a fixed asset. Okay, so cash, if when the company is analyzing the fund flow, it's more, it means where the company using his current asset either to purchase a fixed asset or to repay to his liabilities. Either it is a long term liabilities, or either it is a short term liability. Clear? Now the fund flow having the two consider the major terms of the fund flow, that is application of funds and source of the fund. Now what is the application of the fund and the source of the fund? First you have to understand the source of the fund. Source means where the company is getting his capital requirement, or fulfilling his capital requirement. Okay, either he is fulfilling his capital requirement or this fund from issuing the debenture. Okay, or either is issuing from the equity share or the preference share, either we can say issuing the preference issuing the shares. Okay, then shares having the two factors, that is one is a preference share and another one is a equity share. Okay, so where company generating his source of the fund, where he is fulfilling his source of the fund, either from the retained earning. What? Retained earning. What the company in the last year, if the companies earn some profit, the company retained his some earning for his future growth of the or the day-to-day operation of the company. Clear? Okay, so now this is the source of the fund, that means where company generating his fund. Now what is the application of the fund? Now the company has collected his fund. Okay, so what he is doing after collection of the fund? He is applying somewhere, applying in either he purchase the fixed asset, or paying the repayment of his liabilities. Okay, of his liabilities, and so on. So in this way company collect his fund and apply where they need it to enhance his company, his firms or some. Okay, now the transaction. Now here if you, in the application there is you first of all you have to need to understand actually the statement of the fund flow. Okay, this is a statement of the fund flow operation. Okay, so I just quickly tell you, that is this is fund flow statement. Okay, so in the fund flow statement, in the debit side, that means in the left side, you can see there is a source of the fund, and in the right side, that is in the credit side, there is an application of fund. Okay, so in the source side of the fund is where the company generate his fund, either issuing shares, either issuing debenture, either is taking the loan, okay, or from the creditor, generating the from creditor, okay, or either he generating his source of fund from sale of fixed asset. So from this is the way where from the company generate his fund. Okay, and what is the application of fund? Where the company apply, that means some purchase of fixed asset, okay, repayment of loan, repayment of debenture holder, repayment to the shareholder, or the payment of interest to the debenture holder, payment of dividend to its equity shareholder. So these are where the company apply their fund to fulfill, to flow. This is the source of the fund. It's a inward of the fund, and the application is the outward. Okay, now when your working capital, that means company's working capital is increasing, in that case it's a show on the fund flow statement on the application side, where in the application side, that means increase in working capital is shown in the application side. That means if company's working capital is increasing, so what they are doing, they are applying in somewhere. Okay, they utilize their working capital to apply to purchase a fixed asset, or a purchase something in the repayment of the loan, and all this. Okay, now the transaction when decrease in working capital, that means when the working capital is decreasing, so it shows in the source of the fund. Why when the decrease in the working capital is decreases is shown the source of the fund? Because here the working capital is decreasing. That's why there is a less of the working capital. So this is a condition where company need the cash equivalent. Okay, the company need a cash to purchase to smooth running of the business of the company. Okay, production of the company. That's why the decrease in working capital we are show in the source of the fund side, that means in the debit side. Okay, now the reason of making the fund flow statement, why we are making the fund flow statement? To analyze the reason of change in financial statement, because these all are depend, because on the basis of fund flow statement, okay, we understand why we can analyze our balance sheet. Because when we are purchase, suppose you can see that is application side, there is a purchase in fixed asset. So these fixed asset we are show when we are purchase, there is already fixed asset in my balance sheet. When I purchase some fixed asset, so I am adding that amount in my fixed asset. So what happened, the asset side is increases. Okay, if I am issue some new equity share, if I need a fund, the company need a fund, in that case company issue the debenture. So already company have a debenture, in that case company add the additional amount which the company have issue. So in that case the liability also increases. So ultimately when where the fund flow statement is affect a financial statement of the company. And the financial and the the fund flow statement is prepared by the executive, okay, financial executive, and prepare this financial statement and give the suggestions to know the financial position of the company and know the working capital movement, to know all the things of the company. Okay, now the next reason, this is the first reason. Next reason, to explain the change in working capital of the company. That means because you have seen that working capital, if it is increasing working capital, we are then in that case we are show in the application side. Okay, when there is a decrease in working capital, there is an increase in working capital, we shown in application side. When it is decrease in working capital, we shown in the source side. Okay, source of the fund side. So ultimately what happened is, also we can the company can also able to find out there is a change in what is the effect of working capital in the fund flow statement, and what the step we have to take to solve this problem of working capital. Okay, the next one, that is a depicting all the inflow and outflow of the fund. Inflow means source of the fund, where the company is inflowing their fund, either by issuing the share, either by issuing the debenture, either from taking the loan. These are the inflow. Okay, and where they applying that fund, that is the outflow of the fund. Clear? Now the statement show there is a net impact on the working capital of the firm, because working capital is the most important part of the company, because on the basis of the working capital, the company can evaluate and they calculate and analyze that how much working capital they are needed to run the day-to-day operation of the company. Okay, now the fund flow analysis involve the preparation of the two statement, that is statement or schedule of change in working capital. Yes. Okay, first the company, when we are analyzing, when you have to wanted to prepare the financial statement, the first thing that the company need to prepare, that is schedule of change in working capital. That means format or the statement of working capital, because on the basis of that working capital, we are taking the entry of the increase in working capital and the decrease in working capital in the application side and in the source of the side, and in the application side in the fund flow statement. Clear? The next one, that is statement of source and application. So first thing that company need to do, prepare the statement of working capital. Okay, the second thing the company need to, after that company prepare the statement of fund flow statement, that means statement of source and the statement of application of fund. Clear? Now the statement of schedule of change in working capital. The primarily the purpose of the fund flow statement is to explain the net working capital. And what is a net working capital? You know, that means net changes in working capital. Actually what is changes we have seen in the previous month or the previous year of the company, that is changes in working capital. How much extra working capital we need in this year and how less the working capital we need. Okay, so all of these are prepared on the basis of the working capital. Okay, now the schedule of the change in the working capital is a statement of the compare of the change in amount of the current asset and the current liability. Okay, so actually you know that I have already told that is net working capital is what, from how much current asset company have and how much current liability the company have. After, what is the difference between the current asset and the current liability company have? It means if the company's current asset is greater than the current liability, that means company's working capital is a positive working capital. If the company's current asset is less than the current liability, that means company is having the negative working capital. Clear? Now The fund flow statement, after preparing the schedule in change in the working capital, once we have know that yes, there is an increase in working capital or decrease in working capital, once we know the position of the working capital or changes of the working capital, next step to prepare the fund flow statement and to find out the difference between the source and the application of the fund. And under these statement, focus is given on the change. Main focus, what is the main focus of the fund flow statement? The main focus of the fund flow statement is what is the change in the fixed asset and the fixed liability. Ma'am, now what is the changes, how do you see that there is changes in the fixed asset, in the fixed liability? You can see the changes in the fixed asset and the fixed liability, that is, it is the source of the fund, there is an application of the fund. If you're changing, that means if you're utilizing your cash or your current asset to purchase a fixed asset or purchase a machinery, in that case what happened, your fixed asset, you can see the changes in your fixed asset. You can see the changes in your balance sheet. If you purchase a fixed asset, there is a changes in the asset side. If your company utilizing its current asset for repayment of the liability, fixed liability. What is a fixed liability? It's nothing but your debenture, your equity shares. Okay, when companies repayments liability, they need a cash, they need a current asset, they need a cash equivalent. In that case, if company pay the repayment of that loan, in that case you can see the changes in your liability side. Okay, so these are all connected with each other. Clear? Now the actually there is a this is a statement of the fund from the operation. We don't need it here it now. Let's understand what is the difference between the cash flow and the fund flow. Okay. So here, what is a cash flow? Actually, cash flow is a concept of inflow and outflow of cash. What? Inflow and outflow of cash and cash equivalent. What is a cash equivalent? Cash equivalent is nothing but your treasury bill, is nothing but your government bonds. Okay, then FD. Okay, then the cash in hand, cash at bank. These are the cash equivalents. Okay, during a particular, that means cash flow actually is it's exactly as per his name, that is a cash flow, is nothing but flow of cash. Okay, now what is a fund flow? Fund flow is a concept of change in working capital over a period of time, because fund flow is only talking about the what is the change in working, either it's an increase in working capital or either it is a decrease in working capital. Okay, so what is a calculate? What is calculate? In the cash flow statement, cash from the operation is calculated. Okay, and in fund flow statement, operation is calculated. Okay, fund from the operation is calculated. Now what is it show? It show the short term position of the business and it show the position of the business in the long term. So why we are preparing the cash flow? To show the position, short term position of the company, and fund flow is show the long term position of the company. This is the most important difference of the cash flow and the fund flow. Now the purpose of, what is the purpose of this? Okay, so the purpose of this, okay, so the purpose of this to show the movement of what? Cash flow is prepared. What is the purpose of preparing the cash flow? The purpose of the preparing the cash flow is of the movement of cash during the beginning and at the end of the accounting period. Okay, and now the fund flow is show the change in financial position of the business between the previous and the current accounting period. Okay, now disclose cash flow is the inflow and outflow of cash And what is the fund flow? Fund flow is the source and application available of the fund. Now, what is the accounting basis for preparing the cash flow and the preparing the fund flow? So here is the basis is a cash basis of accounting. What? Cash basis of accounting while you are preparing of the cash flow statement. And while you are preparing the fund flow statement, the accounting basis is accrual basis. Now what is the accrual basis? Accrual basis is nothing but your cash and credit. If you are purchasing in on behalf of cash, or either you are purchasing on the credit in something, okay, or paying in something, so in that case this is the accrual basis. But cash flow statement is only on the basis of the cash basis. Now the part of the financial statement, I guess cash flow is a part of the financial statement. Yes, cash flow statement is a part of the financial statement. The fund flow is a part of the financial statement. No, fund flow is not a part of the financial statement. Okay. Now, the another difference, that is the main difference, a certain change in the financial position between two accounting period. Okay. Okay. Yes, this is actually, there is some mistake in the in this slide. That is, this part is your fund flow and this part it is your cash flow. Okay, there is some printing mistake. Now the fund flow statement is asserting the change in, actually fund flow statement show the financial position, but financial position of between what? Between two accounting period. Okay, but what about the cash flow statement? Cash flow statement is asserting the change in the balance in the cash in hand and cash at bank between two dates. Okay, between two dates. Now what is fund flow? It's reveal the what? Source and the application of the fund. But cash flow, it show the inflow, from where the cash is inflow and where the cash is going to be outflow. Okay, then fund flow statement is help to test whether the working capital, because fund flow statement give the emphasis on the working capital, what is the changes in the working capital has been effectively used or not. Okay, now the cash flow statement is important tools for the cash flow analysis. Okay, now these that is basically the fund flow statement is analyzing the reason for change in the financial position between the balance sheet, two balance sheet. What is, there is a difference between, if I am preparing, I will just give you the example. Suppose I have we having the previous year balance sheet, the company having the previous year balance sheet and company having the previous 2 years balance sheet. Okay, so this is previous year, this is suppose this is a 2023 balance sheet and this is a balance sheet of 2023 and 24. Okay, so if the company having two balance sheet, on the basis of that the fund flow statement analyze a reason, why the reason behind the changes in financial position. Because why? Because balance sheet show exactly the long term. Okay, the fund flow is prepared for the long term changes in the fund or the financial position of the company. Okay, now the cash flow statement is analyzing the reason in change in the cash, reason the change in the bank balance on the particular date. Clear? Now, so here we are just ending our fund flow statement. There is an MCQs. From here we are starting our MCQs to enhance your knowledge. Okay, to build your concept with your MCQs, because we are just reading the, we are just going through the theoretical knowledge. We also need to solve the MCQ series, MCQs question. Okay, so first question which is in your screen, I'm just expecting that, just pause, just answer with yourself. Okay, I'm just waiting for a second. Okay, so here the first question which is in your screen, that is, as per the accounting period 3, what, that is AS3, cash flow statement is classified into option number 1, operating activity, investment activity; option number 2, investment activity, financing activity; option number C, operating activity, financing activity; and option number D, operating, financing and investment activity. So what will be the right answer according to you? I'm waiting for your answer. Yes, Chandan Kumar has answered me. Okay, so here there is a timeout. Okay, so there is an, as per the accounting standard, first there is a, in this question I have take the two answer. Okay, two answer, actually not two answer, actually two concept of the cost accounting. First thing, as per the accounting standard 3, the accounting standard is talking about the cash flow statement. So this is very important. Okay, so the cash flow statement is comes under the accounting standard 3. Okay, this is the first one. Now let's move toward the answer. So in the cash flow statement, I have already told you there are the three things that you need to study. What the three things or the three activities? Okay, first one, what is your operating activity? Second one, that is your investment activity, and third one, that is financing activity. What is operating activity? The activity which is for uses for the day to day or for the day to day transaction. Okay, which you have seen in your profit and loss account. Okay, but it is related, it must be related to your cash, not any credit activity. Okay, when the another one, that is investment activity. If you are investing, if you are purchasing some fixed asset, so this is investment activity. Okay, either issuing share, this is investment activity. Then financing activity, that means you finance something. Okay, that is your financing activity, either you are financing. Okay, so here is option number D is right over here, that is operating activity, financing activity and investment activity. These three activities is involved in the cash flow statement. Okay, and the cash flow statement is comes under the accounting standard 3. Okay, now there is a right answer. Now the next question which is in your screen, that is, in cash flow statement the item of interest is shown in. Item of interest is shown in operating activity, financing activity, investment activity. So the option is given, that is both A and B, both A and C, both B and C, and A, B, C. I am waiting for your answer. Try it with yourself. In cash flow statement, the item of interest is shown in. Don't worry if you're choosing wrong option. So I am there to correct you. I am here to correct you. Okay. So here is option number B and C. Because interest, item interest is just talking about the interest, is not till mention that is the interest is paying or receiving. Okay, so that's why the item of interest, whatever the interest. So it is not your, it's not comes in the under your the operating activity. It's either it comes over under your it comes under your financing activity and your investment activity. Yes, Naik gives the right answer, that's option number C. Okay, so here is the option number C is right answer, that is financing activity and investment activity. Clear? Let's move towards the next question, that is cash flow statement is based upon. Option number 1, cash basis of accounting, accrual basis of accounting, credit basis of accounting, and none of the above. I have just told you, told you in the previous slide. So what will be the right answer according to you? Cash flow statement is based upon cash basis, accrual basis, credit basis. Yes, very good Chandan Kumar. Option number A. Okay, because cash flow is, it's talking about the cash, that's why it is only and only basis on the cash basis. Okay, now what is accrual basis? Accrual basis accounting, it's your fund flow, it's your balance sheet, it's your profit and loss account, it's your trading account. So these all the accounts, that means it's all exception to your cash flow statement. All the financial statement and the fund flow statement, it's on the basis of your accrual basis, and credit basic is nothing like, it's nothing is based on the credit basis only. Okay, it's either accrual basis is I have already told you, that is some transaction in cash and some transaction in credit. Okay, yes. Now the next question, that is the statement of change in working capital is prepared separately in. Statement of change in working capital is prepared separately in. Option number 1, cash flow statement. Option number B, fund flow statement. Option number C, both of A and B, and none of the above. So what will the right answer according to you? We do not have too much time. I have many questions. Okay. Statement of change in working capital is preparing cash flow statement, fund flow statement, both A and B, or none of the above. Option number B is given by the Chandan Kumar. Anyone else? Very good Chandan Kumar. Fund flow statement, which I have already told you in the previous slide, that is change in working capital, it's a part of your fund flow, not your cash flow. So none of the above is going to be cancelled over here, because the cash flow statement is not there, so option number C is also going to be cancelled. Okay, so the option number B is right. Okay, the next question, this is a matching pair. Okay, tax paid, repayment of loan, and sale of fixed asset. This is what? Cash flow, and in cash flow the investment activity, in cash flow operating activity, in cash flow financial activity. So match this. I'm waiting for your answer. The payment of the tax, it is an investment activity. You are investing somewhere else, that means you are paying tax? No. Either it is an operating activity or it is a financing activity. If you match one, no, you will get the answer easily. Repayment of loan, it's an investment activity or it's a financing activity. Sale of fixed asset, it's an investment activity, operating activity or financing activity. Mahima Gupta gave me the answer, that is B. Okay. Sneha A, Chandan Kumar C. Okay. First you have to tell me Mahima A. Okay, you have to tell me, that is the simplest question, that is if you are paying the tax, suppose you are paying the tax, so it is your financing activity, it is your investment activity. If you are paying the tax, it is your investment? No, the option number 1 is going to be cancelled, so option number B is wrong over here. Okay, now if you are paying the tax, it is your financing, that means you are financing to the government. If you are paying the tax, that means you are giving the finance to the government. We don't know what they are doing with our if we are paying the tax to the government. They are not giving the exact data of the statement of what they are doing. Yes, so option number 3 is going to be cancelled for the 1. That is okay. So here is 3 is also going. So option number, that is tax payment, it is the operation activity, because the paying the tax is the operation activity. That means company, when paying the tax, it is the operation of the company. It's not an investment, it's not a finance. Clear? So here is A is matched with the second, that is cash flow from the operating expenses. You will easily get the answer, that is option number A. Now the next, that is repayment of the loan. Repayment of the loan, that means what? It is your financing activity. Your finance, because financing means what? You're generating of the income, either you're collecting, that means in the source of the fund, or it is apply of the fund. That means repayment of the loan, that means you're applying your fund for the repayment. Okay, so this is a financing activity. Okay, then the sale of fixed asset. So when you are selling your fixed asset, that means it is your investment activity. Clear? So the option number A is right over here. Next question, that is while preparing the cash flow statement, okay, non-cash item and the non-operating item are not required to be adjusted under option number A, indirect method, option number B, direct method, option number C, both A and B, and option number D, none of the above. So what will be the right answer according to you? While preparing the cash flow statement, I have already if you we have already, so what will be the right answer? I have already covered this cash flow statement in the last video lecture. Okay, so while preparing the cash flow statement, non-cash item in my app, okay, in the global online app, not in channel, okay, I have covered the cash flow statement. Who was? Priya answered me option number C. In the both. Okay, anyone else? How sale of fixed asset is investment activity? Okay, I will give you the proof of that. Yes, come here in the cash flow statement. Yes, here you can see I have already teach you, Chandan Kumar, in our lecture, that is investment activity, the cash inflow. Your cash is inflow, that means sale of fixed asset. If you are selling your fixed asset, that means cash is coming. There is an inflow of cash. When you are selling your investment, there is an inflow of cash. This is an investment activity. But investment activity in when your cash is inflowing. When you are purchasing fixed asset, we are purchasing investment, so this is the outflow of investment activity, outflow of cash, outflow of investment activity. Okay, Chandan Kumar? Yes. Now come to the question of today, that is, yes, so while preparing the cash flow statement, okay, non-cash item, what I'm talking about, non-cash item and non-operating item are not required to be adjusted under the direct method. So let's understand. I have already teach you the pro forma of the direct method and the indirect method. So here there is a non-cash. So in the direct method, when we have to go through with that forma, you didn't see here. You can see the cash flow of the operating activity, cash receipt, cash payment, non-cash. In the question is talking about the non-cash. So the non-cash item we do not include in the direct method, but in the indirect method you can see non-cash items like a depreciation, amortization, non-operating items like including net profit. These are the items we include in indirect method, but non-cash item we do not include in the direct method. Get it? That's why MCQs is really important after the preparation of the theory. Okay, where is my question? Yes, it is. Here is. Okay, so by preparing the cash flow statement, non-cash item and non-operating items, okay, non-cash items, that is depreciation, okay, non-operating items are not required to be adjusted in direct method. Understand? Okay, you have any doubt? Now the next one, the amount of operating expenses which are actually being paid in cash is shown under. The amount of operating expenses which are actually being paid in cash are shown in amount of operating expenses. Option number A, cash flow from sale, cash flow outflow on purchases, cash outflow on expenses, and option number D, all above are false. I'm waiting for your answer. We do not have much time. Just do it fast. The amount of operating expenses which are actually being paid in cash. We have paid in cash. No one? Okay, so this is your cash outflow. I'm repeating again and again, that means operating expenses. So expenses is not part of sale, it is not a purchase, it is what? Expenses is expenses. Okay, so the cash outflow on the expenses, it is the amount of operating expenses which is actually have been paid in cash. Okay. Okay, the next question which is in your screen, that is a statement is given. Two statement is given. Statement number 1, that is cash flow statement is mandatory for the company listed in stock exchange. And statement number 2, that is fund flow statement does not need preparation of working capital schedule. So his option is given, that is statement 1 true, second false, statement 1 true, second true, or statement 1 false, second false, statement 1 false, second true. So what will the right answer? Again I am repeating, statement number 1 is given, cash flow statement is mandatory for companies listed in stock exchange. One is true, second is false, is given by Priya and Chandan Kumar. Very good, very good. I'm expecting this question from you, and you have answered me very well. Okay, so the cash flow statement is mandatory for the companies listed in stock exchange, because the cash flow statement show the actual liquidate position of the company. That's why it is mandatory. Now the second statement, that's fund flow statement, does not need preparation of working capital. It is must to prepare the working capital. Okay, so option number A is true and second is false. Very good, Priya and Chandan Kumar. Now the next question, that's accounting standard for the cash flow statement is accounting, option number A, accounting standard 3, accounting standard 2, accounting standard 36 and accounting standard 14. Just give me quickly answer. This is most easiest question. Very good, Chandan Kumar. Yes, option number A, accounting standard 3. Okay,
According to the David Maslend, an individual's major motive to work include the need for A. Achievement, affiliation and power, and all of the above. So what will be the right answer according to you? Mark your right answer. According to David McLean, an individual major motive to work include the need for achievement, need for affiliation, need for power. I am waiting for your answer. Okay. Okay, so according to David McLean, an individual okay, so what is your answer? Low sound. Okay, now isn't audible? Now the sound is okay. Oh, now its sound is okay, Rudra. Okay, so what will be the right answer? According to David McLean, individual major motive to work include the need for achievement, affiliation, power, and all of the above. So right answer over here is option number D, that is achievement is also important. Okay, so there are the McLean give the three types of motivation. Okay, three types of motivation. First, that is achievement. Second one, that is affiliation. You can say this is your affiliation motive, and power means the another word, the power for the authority. Okay, authority. So these are the these are the major motives of work which is include. Okay, so when we are talking about the David McLean is a pioneered workplace. He discussed about the motivational thinking, development, achievement based on the motivational theory and models. Clear? Okay. Okay, so when this is for motivation, we need achievement. Okay, we need affiliation, need for authority and power, need for the affiliation. So these are okay, so the option number D is correct. Next question, in the line and staff room staff form, the function of staff is to option number A, obey the line, serve the line, inform the line, and advise the line. What will be the right answer? In the line and staff form, okay, the function of staff is the first thing, that is what is this line function and the staff function. Okay, line function, it is one that directly advises the organization in its core work. Okay, that is line. And what is the staff function? Staff function, that means that support the organization with specialized advisory and support and the support facilities. Okay, so facilities, you can say for not a facility, you can say support functions. Okay, so this is the line and staff. Okay, so now tell me what will be the right answer. As I said, line staffing function is directly advise the organization in its core work, and staff is for the working as an advisory and support function. Okay, so this the question is for the staff. What will be the right answer? Okay, so right answer is advise the line. Okay, advise the line, this is the right answer. Then the HRM is concerned with worker, manager, field staff and all employee. HRM, human resource management, it's concerned with what? Here is right answer is HRM. You know that human resource management, it's not limited for the worker, it's not limited only with the manager, it's not limited only with the field staff. So it's include all overall purpose of the it's include all. Okay, so all the employees, okay, who are working over here, these are all the employees. Okay, so you know that the overall purpose of the human resource, that means HR, is ensure that organization is able to achieve the success through people. That is human resource management. It's talking about the human, it's talking about the people. Okay, so the option number D is correct. Then the next question, these are this really simple questions. Okay, I'm taking this previous year questions with MCQs just because of increase your moral. Okay, increase your confidence. I'm intentionally I'm not taking the too much hard question, or because when we are studying that at the time of examination, we have feel that yes, if we don't know many things, we are getting confused. I do not want to do you confused. Okay, I do not want to do the confused to you. Okay, so that's why I'm taking simple question, just flourishing your knowledge, just making confident. You're feeling confident when you're answering this kind of questions. Okay, here. Okay, now the next question, the sum total of emotional and informational behavior is called. Very good, Kavita Mohan. D answer is correct. Good evening, Rupali Nayak. Okay, so answer this. The sum total of emotional and information behavior is called. Option number A, motivational. B, talent. Option number C, intuitions and the attitude. What will be the correct answer? The sum total of emotional and informational behavior. Mark your answer. Okay, so here is right answer is option number D, that is attitude. Okay, why attitude? Because our attitude and our personality are the combination of our experience, are determine how we interact with other. So when we interact with other, or when we as well as our response to our immediate environment when we interact with other. So we consider the information also, and we also take the some emotional behavior inside. So this is all of these are the it is the attitude. Okay, so the talent is the combination of your skill that one has perfected or the proficient in the, and also the skill having the ability to do something, that is a skill. Yes. And what about the knowledge? Knowledge is that the total experience, that is your knowledge that you have acquired in your whole life, or whatever the duration of life you have spent. Okay, so that's why the attitude is correct answer. Okay, the next question, that is assertion, is giving to you and reasoning. A manager delegate authority. Option number A, statement is assertion is giving to you over here. So assertion is the manager is delegated authority. Reason is that manager want to shrink his responsibility. So both options are given to you. Both assertion and reasoning are correct. Assertion is wrong, but reasoning is correct. Assertion is correct, but reasoning is, both assertion and reasoning is wrong. So what will be the right answer for this question? Manager is a delegated authority. Delegates authority. Okay, manager want to shrink his responsibility, isn't it? No, option number C is correct. Yes, manager is a delegate authority. Yes, this is correct, but manager want to shrink his responsibility. No, is do not want to shrink his responsibility. Okay, so option number C is correct over here. The next question, consider the following steps of processes of decision making and select the correct sequence. Option number A, defining the problem. B, second, that is selection of the best alternative and implementation, considering the limited factor and considering the alternative. So the question is about the steps of process of decision making. Okay, so here is we need to select the correct step. Okay, so what will be the correct step according to you? The first thing, try it with yourself. Yes, Kavita, C option is correct. Okay, not for this question, for the previous question. For this question, assertion and reasoning. Okay, very good. The next question, that is for this question, what will be the right answer? What will be the right answer? Okay, look over here. First thing, when we are taking the decision, suppose you want to take the decision. Why you are taking the decision? Because you have some problem. You're taking a decision for define the problem. So first step is for the define the problem. Then after defining the problem, we have to collect the alternative things which is similar to that problem solution. So second thing that we have to do, consider the alternative. Okay, and after that, considering considering the limited factor we have, where we choose our alternative. After that, we have to choose what? The limited factors. And after that, what we have to do, select the best alternative and implement. So the implementation is the last one. Okay, and the defining the problem is the first one. According to that, we have the two options, but after that we have the consider the alternative, and after that we have to consider the limited factor. So the option number C, this is given by the Kavita, and this is also true. Okay, yes, very good, Kavita Mohan. Chandan Kumar, very good. Option number C is correct. Next question in your screen. Arrange the following in the order in which they are practiced: promotion, performance appraisal, recruitment, training and development. And this is a simple question. They are practiced. They are means firm are practiced. So what the firm do? First thing, you know that first thing, that is recruitment. They are recruiting. Okay, so the in the options you can see 3 is common. Okay, so first the thing that they have do, that is recruitment. The second thing that after recruiting they do the selection process, but we do not have the selection one. Okay, so what the next one? After selection, the company or firm give the training to the newly selected employee, training and development. Okay, so this is your second one. Okay, so you will get our answer, that's option number D. And after that, after training and development, companies see the performance of the particular person. Okay, the selected person. So the performance appraisal, once they see the performance is good, this is true, good, they give the promotion to them. Okay, so this is the process. Okay, this is a process. Option number D is correct. Very good. Chandan Kumar, Monica, Kavita Mohan, Rudra, all are give the right answer, that is option number D. Very quickly. Very nice. Okay, the next one, this is a matching concept. Okay, here is the founder of the name and the theories, who give which theory. Okay, so the Maslow theory, Herzberg theory, Urwick theory and George theory, McGeorge. Okay, hygiene theory, X and Y theory, then need hierarchy theory and Z theory. So what will be the right answer? If you match one, so if you match first, that is Maslow, so you can easily mark the answer. Maslow's theory. Okay, so Maslow's theory is matched with, yes, Maslow is matched with your need hierarchy, Maslow theory. Okay, so this is A is matched with, very good Kavita. D is matched with D, that third one. So this is Maslow's need hierarchy theory. Okay, then after that Maslow give the need hierarchy theory, that is, it is propounded by whom? It is produced by the Maslow, and is talking about the need, that is what the motive of an individual. Okay, to every second need comes to force when the first need is satisfied completely, that is need hierarchy. Okay, so that is your need. Look over here, this is your need hierarchy theory. This is one. If you complete your core thing, okay, basic things, then you have to jump to the next one, then you have to jump with, once if you complete the first stage, then you have to go to second stage and third stage. Okay, this is Maslow theory. Okay, then yeah, here is in a safety and security, then is in esteem, self-esteem. These are okay. So yes, Maslow is need hierarchy theory. Herzberg's theory is your hygiene, Herzberg. Then what your LG, Urwick theory is Z theory, and George is X and Y. Okay, so you well match all. Yes, very good Chandan Kumar, very good Kavita. Okay, so option number D is correct over here. Next question. Match the item from the list 1 with the item is list 2. Okay, so here are the list 1 and list 2 is given to you. Then psychoanalytic theory, then scientific management theory approach, then the subsystem of HRM and the basic element of job, then the list to strong interlinkage, then need a personality, task, and FW Taylor. So what will be the right answer? Match this. Do you know what is the psychoanalytic theory? Psychoanalytic theory, it is your nothing but your personality theory. This is your personality theory. Okay, and this theory is based on the notion that and the individual get motivated more than unseen forces that are controlled by the conscious and the rational thought. This is your psychoanalytic theory. What about the scientific management approach? Scientific management approach, do you know that this theory is management that analyzed and what synthesize the workforce. That's the main objective, to improve the economic efficiency, improve the labor's productivity. That is scientific. Okay. When we're talking about the subsystem, so subsystem, it is your, it's related your interlink. Okay, it is related your interlink. Okay, of HRM. Yes, and when we're talking about the basic element of job, yes, for the basic element of job, what we need a task to complete that task of the basic element of the job. That means why we are doing the job, to complete some task. We have some task that is a basic element of the job. So you can easily mark this question. I already gave you the clue. Yes, very good, Chandan Kumar. Option number A is correct over here. Okay, so your you can easily, that is it is basic element of the job. It is your D. D is match with your third one. So D is match with third one. This is the only option. Okay, then the subsystem of HRM is interlink. So interlink, it is related to your first one. Yes. Then the scientific management approach, you know that this approach, it is related to is given by the Taylor. Okay, and then the psychoanalytic theory, it is your related to your personality, that is personality theory. Okay, so option number A is correct. Very good. The next question, who is the father of scientific management? Yeah, you have to comment me in the comment box. I'm not taking too much time for this answer. Now the next question, what are the KRK? What it is a full form of KRK? What is the full form of KRK? KRK, first thing, the K, what is the KRK? So KRK, it is about your job profile. First thing, okay, job profile for the employee and enable them to have the better clarity of what, of their role. Okay, like you are what you are now, you are preparing for the assistant professor. So job KRK, it is what, it is your job profile. Here in the job profile, you have a clarity. What is your role? Your role is your teaching. This is your basic role. Now you also encourage the student, you also motivate the student, you also they give them the co-curriculum and include them in a co-curriculum activity, involve in the so many things, give them the knowledge, the polish their knowledge. Okay, so give them the right path, okay, right direction. So this is your the clarity of, and this is, and also it's not only related to your student, it's also for the organization. What are you doing for your organization? What the organization need to do? What is your role for that for the job of assistant professor? So this is your, what is KRK. And now what the question is, what is the full form of that? Yes, for the last one question, C option for the scientific management, father of the scientific management is very good, is given by the Kavita, Rudra, Chandan Kumar. Okay, they all give the option number C, that is Taylor. Okay, now the question is yes, option number B is given by the Kavita Mohan, the key recruitment agency. No, this is wrong one. No, this is wrong one. Now the right one is that key result area. This is the full form of KRK. That is your key result areas. It is the where they should well defined, quantifiable and easy to measure. The key result, that means you are preparing for assistant professor. Okay, so what are you preparing for? Now you're in the phase of key result area. That means you are preparing for assistant professor. You have giving the eligibility test. So that eligibility test, it is your key result area. Okay, so they have many things they include over here. Okay, this is a broad category and topics on which the employees has the concentrate during the year. That is you can see the employee who is working at a managerial level. Okay, suppose someone is working on a managerial level in the manufacturing company. Okay, so would have the different key KRK than the somebody who is working in the technology firm. So that is eligible test. Okay, that someone you are preparing for the assistant professor. So the role, that clarity of job profile is for the, that is eligible criteria or the examination what you are doing, that is NESET examination. So this is KRK. Okay, now clear? Next question, the modern organization structure usually recommended is. I am very happy that at least you are trying to give answer. Okay, and you marked many of the questions very correctly, especially Chandan Kumar, Kavita Mohan, Rudra. Okay, these are the students. Okay, now the next, the modern organization structure usually recommended is tall, flat, floating and the circular. What will be the right answer? Modern organization structure. Okay, tall means that means in this way. Okay, flat means the every rules and regulation are the same, or you can say flat same for all. Okay, this is you can say this is a few middle management between the leadership. Okay, leadership and employee. So this is all for the leadership or for the employee, for all level. The structure of the organization, in the modern structure of the organization, isn't it flat? And floating, that means they are floating, there is a not same. Okay, and circulating, that means it's circulating like this. This is going to, this is, here is the top management, then it circulate to middle one, then it circulate to lower one, then circulate to worker. So this is the way. So now the modern organization is basically not working on the floating and also is not working on the circular. So these two options are not our answer. Now we have the question of, we have give you the only two options. Okay, that is tall and flat. So what will be the right answer according to you? Try it with yourself. Okay, so very good, option number B is correct, that is flat. Okay, so why flat organization structure is important? Because when we are talking about, okay, in the context of the big organization, big business, so we can see that is there is a flattening and circulating. Okay, but what about the small business, small and startup, frequently an organization structure that is flat due to their small size. No need for the hierarchy administration. Okay, so this is your flat. Now the next one, which of the following which of the following related to interpersonal communication? Johari window, formal, body language, and all of the above. Interpersonal, interpersonal. No intrapersonal, no intrapersonal. This is interpersonal. Interpersonal, that means, intrapersonal means self. Okay, and interpersonal from one person to another person. Okay, that is interpersonal. So what will be the right answer? The first thing, that is, what about the Johari model, Johari window model? Johari window model is used to enhance the individual perception, okay, in other. That is Johari window. Okay, is used to enhance the perception on other. This is Johari window. Formal, do you know? You know that, and the body language, you know that. Johari is for the person. So yes, very good. Option number A is correct. That is Johari window. Very good, Chandan Kumar. Johari window is correct answer. Okay, so let's understand the Johari window with what is Johari window. So actually Johari window, it's like this. Okay, so here you can see, you know your staff, no to self. Okay, not no to self. This is the section. This is for. Okay, when this is no to other, and this is not no to other. Okay, so this is your open area. Okay, this is open when you know to other, and when you know to self, this is your open area. Okay, when you know to other but you do not know herself, okay, self, so in that case you are a blind spot. You are in the place of blind spot. When you know yourself but you do not know other, that is your hidden area. You know yourself but you do not know to other, and you don't know yourself also and other one also. This is the word we know, that is unknown. Okay, so this is your Johari window. Clear? Now next question, who is an independent director? Who is an independent director? Option number A, financial institution, shareholder of the company, nominee of the outside agency, and none of the. Independent director is not depend on anyone. So he is the first one who is independent, who is called as an independent director. So independent director is a director who is not connected or associate with the company in any manner, and works only to the safeguard interest of the member who is individually cannot be look after his interest. That is the independent, that is nominee outside agency. He is not involved herself. He is just a nominee for the who is working in the company. So he is the independent director. So the option number C is correct. Next one, what is the operative function of the human resource management? What is operative function of the human resource management? Controlling, organizing and procurement, and none of the above. Okay. Operative function. When we are talking about the operative function, so operative function, that means those are which are operationals work, that is a duty. You can, what are the functions, that is operating. Okay, duties, when we are talking about the duties, when we are talking about the functions of a human resource. Okay, so this is implemented by the obviously HR manager. Okay, so when we are talking about the operative function, so there are a wide range of duty. Okay, and what are these duty? That is controlling, isn't it duty? Organizing, isn't it duty? Or procurement, isn't it duty? So yes, all of these. Okay, so here, what is the operating function of human resource management? Yes, so this is first thing, that is what is the duty. Okay, the employee first of all, what are the duties? Employment, this is a duty. Then development, function of HRM, human resource management, what is the function? That is employment function. Then development function. Then third one, that is compensation function. Then fourth one, maintenance. Okay, then the fifth one, industrialization, industrial relation and integration. Okay, so these are integration and these are the functions. Okay, so option number D is correct, that is none of the above. So all of these, what are the operative functions? So operative function, these are the operative function of HRM. So controlling, organizing and procurement, this is not a function. Okay,
is talking about the under section 80C of the Income Tax Act, which is what is the maximum deduction limit for the financial year 23 and 24. So let's pause the video before we are I am answering you. Let's stop the video and try to answer with yourself, and then you can move ahead. Okay, so the first question is, under section 80C of the Income Tax Act, what is the maximum deduction limit for the financial year 2023 and 24? So what is the maximum limit? If you are not watch my video of the deduction, please go through with that video which is given in your description box. So what is the answer of the question number 1? The question number 1's answer is a correct answer is 1,50,000. It's a maximum deduction amount limit which is given in this under section 80C. So here is the correct answer. Okay. The second question is, which of the following expenses is eligible for the deduction under section 80D for the financial year 2023-24? So let's pause the video and answer with yourself, and then you can unpause your video and see your and this your answer will be right or wrong. Okay, so let's start. So the option number 1 is invest in the national savings certificate. Option number B is payment for the health insurance premium, and option number C is for the tuition fees payment for the children education, and option number D is repayment of the home loan principal. So what is your right answer? What will be the right answer? So right answer is option number B. And as I told you, how do you remember this? What is the trick? The trick is like a doctor. Okay, so doctor is related to your health. Okay, so the payment for the for the health insurance premium is comes under the under section deduction under section 80D. Okay, the next question, here is the right answer. Okay, what is the next question? The question number 3 is for the deduction under section 80G is related to option number A, investment in the pension fund, option number B, donation to the charitable institution, option number C, interest on the saving account, option number D, rent paid for the housing. So what will be the answer? Let's pause the video try to give it yourself, and after that you can pause the video. Okay, so here is I just G for the gift and the Garib government, if you remember that. Okay, so G for the gift or the Garib government, what will we do? We give the donation. We give the donation to the Garib government. Okay, so option number B is the correct answer. That is the donation to the charitable institution. So B is the correct answer. Okay, then question number 4, deduction under section 80 CCD are related to 80 CCD are related to. So what will be the answer? Option number A is investment in equity linked savings scheme, that is ELSS. Okay, contribution to national pensions system. Okay, the option number C is interest on saving account, and option number D is donation to the charitable institution. Let's pause the video and answer. Try it with yourself. Okay, so what will be the correct answer? The correct answer is option number B, that is contribution to national pension system is for the CCD. Okay, as I said before that option section 80 CCD is also available in a new tax regime. Okay, is also available in their new tax regime. It's contribution in NPS. Okay, so what is the maximum limit? Maximum radius limit is 1,50,000, and additionally in 80 CCD 1B you will get additional 50,000 of deduction. So the total amount is 2 lakh, up to 2 lakh you will get a deduction under section 80 CCD. Okay, then now next question number 5th, that is a donation in the donation is a deductible under section. Donation is deductible under section option number A 80C, option number B 80D, option number C 80E, and option number D is 80G. So what will be the answer? Yes, good. That is 80D for donation, it's G for gift. So option number D is the correct answer. Now the question 6, maximum amount of deduction allowed under section 80 CCF is, how much the amount? The maximum amount of the deduction allowed under section 80 CCF. So the 20,000 you will get a 20,000 of the maximum amount of deduction allowed under section 80 CCF. Okay, then also 80 CCF is also eligible for new tax regime. Okay, only selected four deductions. For deduction is allowed in new tax regime. First 80 JJAA, okay, then second 80 CCD, okay, then CCD, okay, then 80 CCF, okay, and fourth one, that is CCF, no, 80 CCH. CCH is allowed, and 80 C80 LA. Okay, 80 LA is allowed. Okay, now the question number 7th, in Income Tax Act 1961, deduction under section 80C to 80U not exceeding, cannot be exceed. So option number A, gross total income, option number B, total income, option number C, income from the business and profession, and option number D, income from the business house property. So what will be the answer? Yes, option number A is the correct answer, because as I before said in the last video lecture, that is we will add all the heads income all the heads of income, that is income from the salary, okay, income from the house property. Third one, income from the PGBP, that is profit and gain from the business and profession. Then fourth one, income from the capital gain, okay, and the fifth one, income from the other sources, income from the, we add all the heads, we will get a total, that is a gross total income, and from this gross total income we will deduct, the deductions which comes under the section 80C to 80U. Then you will get a taxable, that is taxable income, okay. So in Income Tax Act 1961, deduction under section 80C to 80U cannot exceed in the GTI, okay. So the next one, there is answer. Gross interest is equals to net into 100 divided by 100 minus rate of what? What will be the answer? Tax. Option number B, TDS. Option number C, deduction, and option number D is exempted. So here he is talking about the gross interest, okay. So gross interest is always related to the TDS, tax deducted at source, okay. So here is the right answer will be the TDS. Option number B is the right answer, okay. Then on question number 9, payment of the LIC premium can be claimed as a deduction under section. We are talking about the payment of the LIC premium. So where we learn that is the payment of the LIC premium can be claimed for as a deduction in under section 80C, in under section 80CCC, in under section 80D, in under section 80DD. So what will be the answer? Let's pause the video, try to answer with yourself, and then unpause and see the correct answer. So here is the correct answer is option number A, that is 80C, okay. The next question, Mr. Sharma contributed to political party, he can avail deduction under section. So here is in this question, here we is talking about the Mr. Sharma, and Mr. Sharma is an individual person, okay. So Mr. Sharma is the individual person, he is contributed to a political party. So under which section he will get a deduction? So option number A, section 80G, section 80GGB, section 80GGC, and section 80GGD. So what will be the answer? Let's pause the video, try to yourself, and then unpause the video. You will get a correct answer. So here I will tell you that GGB is for the company. When the company contributed to the political party, that is, I say that the B company, Garib government to the B company contributed in the Garib government political party. So and I said that is the both are the different, okay, the option number, and the section 80GGC, section 80GGC is for the person, okay. So option number C is the correct answer. Section 80GGC is for the individual, okay. If he talk about the company, then the option number B is the correct answer. But here in this question he is talking about the Mr. Sharma, and Mr. Sharma is an individual person, so he is contributed to the political party, that's why he will get a deduction under section 80GGC, okay. Here is the right answer. Next question is question number 11. Deduction can be claimed for the amount deposited under here is a Sukanya, okay, Sukanya Samriddhi account, Sukanya, okay, it's a Sukanya Samriddhi account. Under which section? Option number A, 80CC, Option number B 80C, option number 80DD, and option number D is 80D. So what will be the answer? The right answer is option number B, that is 80C. Under section 80C, the depositor get the deduction under Sukanya Samriddhi Yojana. He will get a deduction. Okay. Then question number 12, deduction on interest on loan taken for the study. Study fall under study for the, it's related to education. Okay. So which section comes under? E for education. So option number A is the correct answer. Option number C is the correct answer. He will get a deduction under section 80 E. Okay. Here is the right answer. Then question number 13, the amount of the deduction under section 80 DD regarding disability. So how do we remember this? It's a tricks for the A section 80D, that is a dependent disabled person. Okay, dependent. Okay, the dependent disabled person. So what will be the answer for this question? The rupees 30,000, how much amount he will get a deduction? Or the 30,000, 50,000, 75,000, or actual expenses? So what will be the answer? Option number C, that is 75,000 in case of normal disability. Okay, normal disability. Or if it is come under, it's more than, okay, it's more than 40%, but less than 80%. In case of, this is first condition. Second condition, he will get 75,000 of as a deduction amount. Okay. In case of severe disability, that is more than 80%, then he will get a 1,25,000 amount as a deduction amount. Okay. Then here is the right answer. Then question number 14, contribution made to an approved research association is eligible for deduction up to. So here is talking about the research association is eligible for the deduction up to. As I said in the last lecture, in case of research you will get how much deduction? That is option number C, 100% deduction. If you are contributed for the research, so you will get 100% deduction. Okay. Now the question number 15, the maximum amount deductible under section 80 GG in respect of rent paid is dash per annum. Okay. So in last video I said that under section 80 GG how do you remember? It's like a ghar. Okay, ghar, that is rent paid for house. Okay, house rent paid is a house rent paid. So here you will get 5,000 rupees, 5,000 per month. So how much amount you will get? If you get 5,000 per month, and how much amount you will get per annum as a deduction amount? How much? The 5,000 multiplied by 12, then you will get 60,000 per annum as a deduction. So the option number D is the correct answer. Okay, here is the answer, that is option number D. Then option number question number 16, section 80C is provide for the deduction in respect of the tuition fees. Okay, to the children. How many children? There will be 2 children. Okay, so here is the answer, like hum do, hamare do, not more than that you will get a deduction in under section 80C. Okay, so here is hum do, hamaru do, you can remember like this. Okay, the option number 17, tax deduction available to certain industry. Okay, what he is talking about? The tax deduction is available to certain industry for the industrial few years is called as tax deduction available to the certain industry. For the initial few years is called as TDS, tax deducted as source. Okay, here is the correct answer. Okay, next one, which among the following deduction is available only to the disabled person? Only to the disabled person. Then you can say that a disabled person. We also say that assessee. Okay, assessee. So which among the following deduction is available only to the disabled assessee? So what will be the answer? If you remember that the section 18 DD is for the dependent disabled. Okay, dependent disabled. Okay, the persons like a spouse or the dependent children, dependent parents, minor children are depend on the assessee. So if depend on the assessee, then he will get the 80 DD as a deduction amount. Okay, and a deduction under section 80 DD, and in case of 80 DDB, that is a dependent disabled big for the severe disease. If a dependent disabled having a severe disease like a cancer, like a tumor, then in that case he will get also a deduction under section 80 DDB. But what about the person? If that person who is a assessee is also facing the same problem with some disability, then in which section he will get a deduction? So the option number D is the correct answer. Under section 80U is for the assessee, if the assessee is disabled. Okay, so here is the right answer. Then okay, the question number 19 is quite different from the deductions question. So the question number 19 is interest free loan to an employee where the amount of the loan does not exceed any one of the following shall be treated as a tax free requisite in all cases under section 17 subsection 2. Interest free loan to an employee. If an employee get he want to take a loan, but he want to take but interest free free loan, then he does not exceed any one of the following. That means if the employee is taking some amount of loan, some limited amount of loan, then he is not liable to give the interest. So he will get an interest free loan on that amount. So how much amount he will get? How much of a loan he will get to get a interest free loan? So here is the correct answer is option number A, that is 20,000. So if the employee take a 20,000 amount of loan as a principal amount loan, he will get an interest free loan. Okay, he is not liable to pay any interest. Okay, so the amount is 20,000. Okay, here is the answer, that is 20,000. So the next question is Rahul is provided the furniture to the value of 70,000 along with the house from February 2023. The actual hire charges paid by the employer for the hire of furniture is 5,000 per annum. The value of the furniture to be included along with the value of the unfurnished house for assessment year 2024 and 25. So how much amount he will get? So here you said there is some rules you need to follow. In according to this question is related to rent free accommodation. Okay, rent free accommodation, and here there are the conditions over here. So first condition is whatever the actual rent paid by employee. So how much amount he is paid? The amount is paid for the furniture is here. See, the paid by his employer, that is 5,000 per annum. So here is the actual amount, how much amount is paid, that is 5,000 per annum. Okay, and the second condition, or you need to fulfill the three conditions, and whichever is lower. So first condition is actual rent is paid, and the second condition is 15% of salary. Here you can see in this question there is no detailed explanation or no information is given, that is how much salary Rahul is get. Okay, so in this case there is no amount. Okay, we don't know about the salary of the Rahul, so we are unable to calculate the 15% of the salary. Okay, and the third condition is condition about about the population. Okay, population. If the population of the area, if the population of this town, if the population of the city is up to 10 lakh, then 7.5% of the salary. Okay, if the population is at 10 lakh to 25 lakh, so 10% of the salary. And if the population is more than 25 lakh, okay, 25 lakh, then it is a 15% of the salary. So in this question, in this particular question, we do not have the enough information, okay, about the population, about the salary. So again we are I'm going to read this question again. Rahul is provided the furniture to the value of 70,000 along with the house from the February 2023. Actual hire charges paid by the employer for the hire of the furniture is 5,000 per annum. Okay, the value of the furniture is to be included with the value of the unfurnished house for the assessment year 2024-25 is. So here you can see the many of the time their question, they are just intentionally put like this kind of question. So we don't get confused, just remember these rules. Okay, just remember this, whatever the information is given, we will doing according to that question. Okay, so in this question the actual rent paid by the employer is 5,000 per annum. We don't know about the salary, so we don't know, and we don't know about the population, so we are unable to calculate it. So according to this question, whichever is lower, whichever we will get, that is a 5,000. So okay, whichever is lower. Okay, but according to this question we will have only the information of the 5,000, the actual rent paid by the employer. So here is the 5,000, that is option number D is our correct answer. Okay, so the next question, here is the right answer is given. Okay, then here is, you can see, I'll give you the summary of that of the solution. Okay, here is talking about where the accommodation is provided by the government to an employee. If the government provide you, the license fee determined by the government, whatever the license fee is provided by the government. So here we add that amount and less the actual rent paid by the employer, whatever the amount paid by the employer. So in this case 5,000. Okay, but we don't know about the government of license fees in this particular question, but this is a general. If the another questions is comes to your, we will come in, if we come in your examination, you have to know about this format. Okay, so another one, that is if the accommodation is owned by the employer, it's owned by the employer, in that case if the population of the city having the 25 more than the 25 lakh, okay, so in that case 15% of the salary in respect of the period of the accommodation minus rent recovered from the employee, whatever the rent recovered from the employee. Okay, this amount we will write over here. Then if in case of the more than 10 lakh but less than 25 lakh, in that case 10% of the salary and minus rent recovered from the employee, whatever the rent is recovered from the employee. Okay, then in the third case, in the other city, okay, where is the population is less than 10 lakh, okay, is less than 10 lakh, okay. So in this case the 7.5% of the salary in respect of the period of the accommodation and rent recovered from the employee. Okay, then our condition number 3, if the accommodation is taken on the lease by the employer, if the employee is also in lease, okay, he is not own property, is not own accommodation, so in that case lower of the lease of rental paid or payable for the employees or the 15% of the salary, okay, less actually rent paid by the employee. So here is a format, you can go through with it and you can save this, you can take a screenshot of that. Okay, so let's move ahead with another question. This is the last question of our lecture, that is the question number 21. Okay, Sham stay in Bangalore. Okay, he stay in Bangalore, that is in metro city. Okay, he is living in metro city. Then his basic salary is 10,000 per annum. Yes, his basic salary 10,000 per annum. DA 60% of which from the part of pay is 6,000 per month. Okay, per month. Okay, it's 10,000, that is per month. Then HRA is 5,000 per month and he is entitled to commission 1% of the turnover achieved by him, whatever the turnover he achieved. So how much the turnover? That is a 12 lakh. Okay, here is, you can see, Sham pay a rent of 5,500 per month. Okay, then the turnover achieved by his employer, the current year is 12 lakh. The amount of the HRA exempted under section 10 clause 13A. So here is where here is the question of the exemption. Okay, you can see. So how do we calculate this? So first of all, there is a conditions. Let's go through with that condition, that is HRA. Many of the time we will get a rent free accommodation, we will get confused in exemption and deductions. Okay, so that's why I take the two questions simultaneously, because in case these questions come, so you don't get confused. Okay, that's why these two questions are taking simultaneously. So here is HRA and this comes under the section, that is 10 clause 13A. Okay, so here is also a 3 condition we need to fulfill. The first one, actual HRA, okay, or second condition, whatever the rent he paid, minus 10% of the salary. Okay, or third one, that is 50% of salary. Why I said 50%? In case, because he is living in the metro city, that's why 50%. If he is in if he is living in the other than metro city, then we will get take a 40% of the salary. Okay, 40% of the salary in case of non metro city. Okay, but Mr. Sham is staying in Bangalore, so he is eligible for the 50% of the salary. So how will we get the calculate actual HRA? What is the amount of the HRA? Here we see, here you can see that HRA is 5,000 per annum. So here we, that is 5,000 per annum, so 5,000 multiplied by 12. So what is the amount? That is the 60,000. Okay, got it? Then rent paid, how much rent he has paid? He paid 5,500. See here, the Sham paid a rent of 5,500 per month. So here whatever the what amount is paid, rent paid 5,500 multiplied by 12. Okay, okay, minus 12% minus 10% of salary. How much salary he is getting? How much salary he is getting? This Bangalore, his basic salary 10,000 per month. So we will calculate over here. One second. We will calculate over here. That is a 10,000. Okay, per month is 12. So 12 lakh. 12 lakh. Okay, so 12 lakh. Then 60% form the part of the payment. Okay, how do we calculate the salary? Salary is equals to basic salary plus DA plus commission. Okay, so how much amount? There is a 12 lakh. Then 12 lakh again 6,000 per month as a DA. So 6,000 multiplied by 12. Okay, so how much? 6,000 multiplied by 12, that is 7,000, 72,000, and commission 1%. Okay, so 12 lakh multiplied by 1%. Okay, 12,000. So it is 12,000. Okay, so in this we'll total this okay, so here is we will get a total of this. So here is rent paid 5,500 multiplied by 12. Okay, and that is 66,000. Then minus 10% of the salary, and salary will get a salary of 17 lakh 52,000. Okay, 17 lakh 52,000. When we get total this, so 2,000. Okay, so here is 10% of that. So how much? 66,000 minus 17,520. So here is 48,000. We will get 48,480 amount. Okay, in the second condition. Okay, then 50% of the salary. So salary is we calculated, that is 1,57,200. Okay, 200. Okay, multiplied by, is it 1,200? Here is 1,200. Okay, so we'll get 17 lakh 5,200. Okay, okay, then 50% of this, that is 1,75,200 multiplied by 50%. So here we will get, that is amount is 87,600. Okay, so 87,000, whichever is lower, so in the second condition we will get a lower amount. Okay, so 48,480 is the deduction exemption you will get, that is option number C is our correct answer. Okay, so option number C is our correct answer. Okay, there is some correction where, okay, how do we calculate salary? Okay, I will tell you how do we calculate salary. That is a basic plus DA plus commission. Okay, commission. Okay, so basic is 10,000. Okay, 10,000 per month, 10,000 per month plus DA. So how do we calculate? That is R, here you see that is 6,000 per month. So 6,000 how much? That is 60%. Okay, 6,000 60%. Okay, then commission 1%. So 1% per percent means that is a 12 lakhs 1%. Okay, we will calculate the percent of the 12 lakh. Okay, so here is how much will get, that is this is 10,000. Okay, plus 3,000, the 60,000, 60% of the 60,000, that is 3,600. Okay, so here is 3,600, 6,000 60% of the 6,000, that is 3,600 plus 1% of this. Okay, no, here is talking about the 12 lakh of the turnover. So here we will not take a 2 lakh, here we will take 1 lakh. Okay, so because in other, that is the basic is about the per month and the DA is also for the per month. So commission is, we also calculate the commission for the per month. Okay, so 12 lakh divided by 12 we will get, that is 1 lakh. So 1 lakh per month. Okay, then in 1 lakh per month we will calculate 1%. So here is 1,000, we will get 1,000, then we will get added this, so we will get 14,600, and after that we will multiply with 12. Okay, then 14,600 multiplied by 12 is, that is 1,75,200. Okay, yes, so the salary is 1,75,200. Okay, now I hope so you will understand from where we calculate the salary. There was a confusion is in this, you will I know that you are get confused in this, but now I have cleared this, how do we calculate it. Okay, so thank you so much, and after that we will continue with our MCQs questions, so we will get all the concept clear. I will try my best. Okay, so have a good day.